but you can call me Shirley. On TikTok, I go by Shirley, Short Trades, and Power about Shirley. We're going to talk about the market, how to set up your charts, um, where your plays get their power from, where support, where resistance, myths, how to have the right mind frame to trade. We're going to go over a lot in these lives, as I promised you guys once the YouTube came together, right? Essentially on how to trade. A little bit about me. I've been trading for going on about 14 years. So I experienced a lot of different markets, and believe it or not, I learned actually from all the mistakes that I made. Unfortunately, I wasn't able to just run across the right people that would teach me things. Watch this, that would work essentially on a daily basis. I wasn't fortunate enough to have that happen for me. But it actually is one of the biggest blessings, right? Because essentially, I ran into situations where I've been able for myself to see how things work in the market. All right, so we'll go over everything. This is like the first part of this in regards to the charts, how they're set up, how I set up my charts, why they're set up. A lot of people, when they analyze markets, they use basic candlesticks, right? They'll look for candlestick patterns, they'll use news, they'll pay attention to fundamentals. A lot of technical analysis is done for people to give insights as to why the market moves. But for me, particularly, I understand that the market has to get information to move. Okay, it literally gets into a formation to move. It is not subjective. It is not conditional. If you're going to move your furniture out the house, you know what? You're going to pick it up. You're going to make footsteps. You're going to carry it. Watch this, out of the house. You're going to get into a formation to do it, right? You're not going to get opinionated because of what you see in terms of outside factors, what your neighbor is doing, what's trending in social media or anything else, right? You're going to do what you do because you get into formation to do it. That's simple, easy way to interpret, and easy way to analyze, right? So, first things first, we're going to talk about these charts, right? You need charts. You do need charts. Um, you need to see essentially why your play is moving the way that it does, right? You need insight. The market, the stock market, any stock that you look at, any forex, any crypto, any pair that you look at, forex, anything, commodities, it moves because of buyers and sellers. Okay, that's who moves the market. When anyone tell you anything different, it's not going to make sense. The market moves because of buyers and sellers. Watch this. Someone wants to say that because this happened in this part of the world, this is why the market is moving. It's moving because if that happened on this part of the world, if it was a catalyst for your play, guess what happened? Buyers and sellers begin to take action. That's why the market moves. That's always why the market moves. Watch this. When they move severe enough, when buyers and sellers move severe enough in a market, they create trends. They create trends. Now, the trends are what then reinforce that move. Okay, watch this very quickly. What moves markets? Buyers and sellers. Continuous upward price action, continuous downward price action. People literally pressing the button to buy and sell. When they do it with such extensive nature or an extensive format, it creates trends. Trends then reinforce the movement. They reinforce it. So it's a key component that you need to understand with trading. All right. So someone says, hey, why did the market do this today? Yes, buyers bought the stock up and they bought it up with such extent that they caused the reinforcement of the move to form by having trends. Trends. Trends reinforce upward and downward price action. With a house, the foundation and the pillars of support hold the house up. They reinforce what you have built, right? So trading has that component to it where you have to actually see what allows the move to stay up, what allows the move to stay down. Every single time, that's going to be an uptrend or a downtrend that reinforces upward or downward price action, right? It's going to be an uptrend or a downtrend that reinforces it. All right, so just to recap, because I'm sharing some things with you, this is going to be always on the page. It's like the first video. So it's videos that you can play back to make sense out of market movement, right? Market moved up today. Well, what happened? Buyers pressed the buy button. Absolutely. But there's another component. They also had to reinforce the move in order for the price action to stay up. They had to form trends, right? They had to form trends to reinforce it. You can see this on the chart by using different time frames to view something. Like for instance, let me give you context. If a bank approves you for credit, if a bank approves you for a loan, watch this. They don't care that you've had a recent change of heart, maybe from the way that you normally didn't pay back loans, you normally didn't keep your promises and uphold obligations. You've recently changed, now you will. They're not going to look at that. That's irrelevant. They're going to gauge you by the timeline of events of how you have paid back others what you have owed. Are they going to take into account who you are in the last couple of days, last week? Not in the entirety. Banks have common sense. What? Common sense that a person is actually the cumulative actions over bigger periods of time. What does that mean? Someone just met you and they have an entire mindset as to who you are. This makes no sense. Watch this. How long have you been alive? How long have you been alive? And then someone will say, I know this person. I know this type of person. You just met them. I know, but the first impression tells you everything. First impression tells you everything. Maybe it tells you something in regards towards a certain viewpoint, but the entirety of what something is, you don't even know the entirety of yourself, right? You can't do it. But watch this. This is the same thing that happens in markets. People want to gauge what's going on in the market based upon what they see happening. You ain't gonna believe this right now. I see what it did last 5 minutes. So the last 5 minutes is the accumulation of events that tell me the entire story as to how a stock is sustaining upward or downward price action. Last 15 minutes, does that sound better? What about this? The last hour tells me everything. The last hour tells you everything you need to know about a stock. Just the last hour? Okay, got you. You need context. You have to begin to build, I would say it, the pieces. Look, I'm sharing with you the pieces of the puzzle to form the entirety of what the puzzle is, right? This is why when we look at charts, and the insight I'm gonna give you when I show you the charts is why we do what we do. It won't make sense for us to have one piece of the puzzle and say this is how the puzzle comes together. You got missing pieces. I can't see the entirety of this daggone puzzle. So when I trade, I use the following time frames. I use a 1 minute chart. I use a 5 minute chart. I use a 15. I use a 30. And I use a 1 hour. I'll take a look at the 4 hour chart. I'll take a look at the daily chart. If necessary, I'll take a look at even higher, weekly, monthly, quarterly structures. So I can put the pieces of the puzzle together to see why my play is moving the way that it is today. Okay? What you do, I make this assessment a lot of times on my lives. What you do today, watch this, is already determined by the accumulation of past and present events. Watch this. Something comes up into your life, a situation. You said, I will deal with this situation when I get there. You're already going to deal with that situation based upon how you already are an accumulation of both past and present events. They already dictate how you're going to respond given the scenario. I know you would want to say, based upon the scenario of the external force that you're dealing with, I'll make my decision. It ain't got nothing to do, watch this, with that external force. You're already wired to behave. See the mindset? You're already wired to behave. How you're going to behave when you get into a situation. Someone cut you off in traffic. You're already wired to how you're going to behave if someone cuts you off. Someone plays with your money. Someone interacts in a way that you deem as negative towards your family. You're already wired before it already happens. This is the stock market. Welcome. All right. This is exactly how the stock market works, where people are misguided to think that the market moves based upon the randomness of how buyers and sellers press the buy and sell button to see how the market's going to behave. This is when people get screwed. Why? Because they now want to see what happens in the moment to determine what a play can and cannot do. We're going to show you that. We're going to mess with that real quick. So what we're going to do, we're going to pull up some charts here, right? So I'll give you some basic logic. What moves the market? Look how simple it is. What moves the market? Buyers and sellers. Stop playing with me. Buyers and sellers. But what if random news comes out? What if they have good earnings? Those are outside factors that can be an additional catalyst to help give a stronger move to bring, watch this, more buyers, more sellers into a play. Watch this. But that play is going to move. It is going to move based upon, listen to me, based upon the buyers and sellers participation on in those plays that it already has formed entire structures of trend. You already have entire ecosystems when you are trading the stock market in regards to where resistances may sit, in regards to where support levels are sitting on those charts. You already have trends across the board, pivots. You already have so much structure on a play that's already been dictated to how that play has to behave and come into those areas, what type of power it needs to bring to break down them, that even when news comes out, news has to flow within the realms of how your play is already structured. You can bring in more participation, but watch this, the additional participation that you bring into a stock with news, fundamentals, your earnings, different things like that, they still have to move in the arena that is your stock. And your stock, whatever you're trading, still has an entire structure that dictates how it moves. Okay? Like your personality, your character, well, these are things you don't build just overnight, right? But they're driving forces for how, once established, how you will move in your life. Literally, your belief systems, the things that you have passions for, the the things you have disciplines for, your characteristics, your personality, right? These different components dictate how you move. So that when, watch this, you have situations, all they essentially do is bounce off of you, your character, they bounce off of your disciplines, they bounce off of your personality, they bounce off your passions, they bounce off of your addictions, right? Things that you have is grounded, rooted, strong, very powerful drivers for how you live your life. The life itself bounces off of those things. So you will think that sometimes the interactions that you have with other things is the driving factors to how you sometimes can move. Things are bouncing off of you. Watch, it's an idea bouncing off of you, a thought bouncing off of you, a negative situation, a person doing something bouncing off of you. They all they're doing is pulling out you. Okay, all they're doing is pulling out you. Right. So the stock market in itself moves because things pull into its overall structure, into its trends. If it's in a trend to sustain upward price action, you're going to have a big group of sellers pull into that uptrend. The move makes sense. Now it's going to bounce back up. Why? Because we pulled into the stock structure that's an uptrend. going to bounce and go back up. Got you. We will pull into and it's not any particular structure. That's what we're going to start sharing with you on these charts. It's not any particular structure. It's the structure that makes up your core identity, right? There's some things that you can do where people can even deem you as being out of character. There's some things you can do like in life. Well, this isn't how he normally responds. This is not how she normally responds. But then you got other scenarios where people be like, this is who I know them to be. This is how I normally see them off. So that's the part of you that people will see on a routine basis. People identify with you. People ask people about you. They'll be like, this person's yada yada yada, right? And then when they hear something that's adverse, right? It's not that that's not you. That's a part of you, but you have maybe another part of you that's routinely front and center. Does that make sense? Be a good, fun, loving person, but the right circumstances can bring out some nasty, right? Right? Can bring out some anger and things towards you. So, but it's already in there too. But overall, you could be a fun, loving, good person. You know understand what I'm saying? So the stock market has things like that. That's why we look at multiple time frames trends so we can make sense out of it. We got to be able to make sense out of it on any particular day. The market is in an uptrend, but right now it's having a strong move down. We need context to see why, right? Because then we'll know, watch this, when there will be a correction to how the market is overall and most powerfully in a formation, whether it's an uptrend or downtrend, to revert back into itself. Okay? To revert back into itself. All right, so what we're gonna do, not gonna waste time, we're gonna show you some charts. I'm gonna have to remove some things that I currently have from my charts. I'm gonna come out with a completely blind state. My charts are never lacking anything. I don't trade like that. It's not good insight for me to look at the market with just candlesticks to show you that. All right. So we got different charts up, so you can see how my charts look like on the side. So you can see how my chart essentially looks like on the side normally. But what we're going to show you guys is essentially just this one chart. And I'm going to show you things that I add on my charts and why I do that. Okay? I'll show you what I add on my chart and why I do that. All right. So I got a 15-minute chart up here. There's just one particular time frame that I got up here. I don't think it allowed me. There it goes. I was looking for that little zoom feature. Thank you. Need that. All right. Let's adjust this camera angle a little bit. All right, so we got a ticker. This is the NASDAQ, by the way. So we got the NASDAQ. Zoom out just a little bit. So let me zoom out. There we go, just a little. All right, cool. All right, so we got a NASDAQ. So first off, I'm gonna explain it later, but right now I'm gonna show you guys what I add to my charts. Okay, so I use Thinkorswim with Charles Schwab. It's free, don't cost me anything. Essentially, just it's the broker that I use for just their charts. Primarily, can I trade with them on options? Yeah, you can trade with them on options as well. Like you can go through them. I like their system, but right now, like I'll play around with just being able, because I like how I can easily put money in and money out with like Robinhood. So I actually buy stocks and options with Robinhood. It's just an easier process to take money in and out. Want to take it out, put it back in very quickly. I can't put money back in very quickly with Charles Schwab. I can't do it. I got to go to the bank and do a wire transfer. That takes like 30 minutes then to hit. Once I do an actual domestic wire transfer, I ain't got time for that, right? They had it set up better before when they were still like we were still with like TD Ameritrade. They had it set up a lot better then, but when they did the merge with Charles Schwab, that went away. That went away where you could just easily just put the money in from like a debit card or anything back in. So we're not gonna have that. I'm not going to the bank every time I want to put some more money in my account. Like, nah, I'm not going to do that. All right, so I'm going to tell you what I put on my charts first off. So we'll give you insight, right? And let's give the insight too before I tell you what moving averages and different things I'm going to put on my chart. Give you some insight here, right? Because you need insight to see why would I use the indicator. You got other traders out here, right? You got other traders out here that'll do things like this. They'll be basically like, hey man, I got candlesticks on my chart. I watch the patterns. I see where they tell me that there's resistance. I look for those plays to come back into the area where it shows me that it's struggling, break out from it, maybe retest, show me it's that area of resistance is not for it. They'll take their trades based on price action. You'll even hear people say these type of things. Price action is king. You got traders out here say volume is king. You got traders that say order flow is king. You got people that'll say patterns are king. You got people who will say fair value gaps, right? This is what happens between 3 bar setups of a candlestick is king. You got people who will say that RSI, relative strength index, is king. You got people that's going to be saying the most about how to gauge the market. And I think a part of this is based upon how people are wired themselves. They'll gravitate towards a particular strategy. That's fine, right? You gravitate towards a particular strategy. You got people out here who will wait for the market to move the first 15 minutes and then make a trading based decision because they feel that now the market tells them what it wants to do. It's figured it out. The market didn't know what it was going to do. Watch this. The market didn't know what it's going to do, and now it's figured it out, right? You got different types of traders, right? What's good? What's good? You got different types of traders. And God, this is a live session. So the cool thing about it is it's always going to be in the live section, right? It's going to be always going to be in the live session for you to play back. And I'm going from the beginning. I'm going from the beginning. Why I put things on my chart so you guys, I don't have to say this. I think that's wrong. I think that's draining me. Always going back to the beginning. In the beginning, there was oh Lord. I'm like, I don't know if I can keep doing it. I was like, I don't know if I can keep doing it. So that's the main reason why I wanted to start the YouTube for you guys, so you guys will be able to have a reference point. Hey man, go back to those live videos, free content, and put the pieces together. I'm literally giving you mindset. I'm giving you logic. I'm showing you how you actually can see why the market moves, and not from an opinionated or a conditional base, or watch this, which people love to say, from a high probability. High probability always sounds pretty good. Watch this until you're playing around with your money. The moment that you start playing around with your money, you know what you don't want? High probability. Nah, we can. Let's just make. Hey, let watch this. Watch this. The moment we start messing with our money, hey, like going to work. Watch this. Getting paid from a job. You never want to hear the words, hey, there's going to high probability that you can get your money on Friday. What the hell does that mean, right? That don't sound good. Watch this. And it don't sound good at all. Hey, man, we got you around there around 85% chance, right? That you're going to get paid from the work that you put in. This sounds freaking terrible. But somehow in trading financial markets, this 80%, watch this, because so many people are getting slaughtered, right? 80%, I'll take it. 85% chance of success. Hey, shit, I'll take it. You got people out here messing up little Johnny's college fund, right? Hey, shit, 85% chance of success. Have some managed risk. Watch this. An area where I'll stop out. Sounds good. This doesn't sound good to me. Watch this. At all. It doesn't. It doesn't sound good to me. Or no matter how you spend it. Hey, Reggie, we got a 90% success rate using our strategy. All I hear is 10% failure. And I may be the one that gets in on the 10% failure day. I know it. It'll be my luck. 10% fail. Reggie, damn, we was hot the last month. The first day you come in, damn, that 10%, right? This is terrible to me. No, I don't want to trade any subjective base setups. So watch this. It eliminates basic strategies that you're going to be taught from other traders. I'm not even covering it. I'm not covering patterns with you. I'm not covering volume randomly coming into a play. Shit, I don't know what's going to create the volume. I'm not covering fair value gaps with you. I'm not covering order blocks with you. I'm not covering opening range breakout scenarios with you. No, I'm not covering anything that is subjective. has you on the sideline wondering, damn, it didn't work today. We'll try again later, or we'll try again tomorrow. I'm not going to discuss it with you. Okay? It's irrelevant. All right. So, how do you, watch this, then how do you trade in a way that gives you such assurance that the trade will freaking work when you got everybody else out here struggling? How? Tell me. Enlighten me. Everybody else in their mama, right? Out here fighting for their lives. Nervous, anxiety, right? Hoping that their high probability setup works today. Concerned, watch this, hopes that a stock can break out from a particular area of resistance. Watch this. An area where it struggled to break, boom. They want to see it pop up. Watch this. Retest the area. Resistance, now support. I trust the trade. Let me get in for the further upward continuation. Didn't even have confidence that the play was going to have upward continuation until they saw it give some type of confirmation that, hey, where it previously struggled, it's now able to sustain that move using it as support. For they didn't have, all I hear when people start telling me about most of their trading strategies is doubt, worry, subjectiveness, right? Inconsistency. Watch this. Wait and see approaches. This is all I hear across. It's sickening to me. It's like I will listen to other traders only for so long because I know the moment of subjectivity is around the corner. Hey, if it literally in analyzing the market, if we break this area, I then think, oh, damn, it's already subjective. He already, first statement, if. Watch this. Why is if such a dangerous word in trading? Because, watch this, the market is not going to do an if. The market either will or will not. Oh, damn. So the market, absolutely. You mean in absolute terms? You mean the terms that people don't want to come to the table and speak on? That's the way that the market trades. Yeah, the market is absolutely either going to sustain upper price action at this area, boom, or it will not. So what the hell is this about? Watch this. What the hell is this about in my trading style that is subjective? This makes no sense to me. Why the hell do I have a conditional based strategy that might work? That I need to even check for confirmations that it is working. Watch this, when it either will or will not. That's why I be trying to tell people, you need to go back to the drawing board because there's no way that you're supposed to come into an open with that type of insight on something that's going to factually do something. Watch this, but you can't help it. Why? Because you're going to use these little simple ass candlesticks. They're too subjective. Hey, life is on the line. What's the next candlestick going to do after this one? You out of here, buddy. You're gone. Did you hear me? Hey, what's this? What's the next candlestick gonna do after this one? You out of here, buddy. You're gone. You're a goner. You don't know what the next candlestick is going to do in relation towards its movement. You don't know. Is it gonna move? Is it gonna give a wick down at the bottom first? You out of here. I'm not basing my trade on these silly candlesticks. I'm screwed. You're always going to be screwed. You're always going to be reactive. Do you hear me? You're always going to be reactive. Why am I spending time with this? Because I got to tell you why some traders have why some traders approach the market and they're concerned about coming into an open. They're concerned about getting into a trade and you should have a right to be like that because, man, be honest truth. What's one candle from the next candle going to be acting like? If I got in the mood to go for upper price action, I got in here, it was looking good, and immediately it starts coming back down. Hey, 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 hey. You start getting a little nervous. Did I see it right? Right? You get a little nervous, a little concerned. How about the blow? You see in your profit and loss changing. We can't trade based on those merits. All right. So candlesticks, we'll use them as a tool to point out what we already know is going to happen. Did you hear me? Candlesticks show me the movement of upward and downward price action, where price is at any relative moment, right? The end. You are not, watch this, you are not my determining factor to get into a trade. Oh boy, there you go. That's when I generally may lose some of my audience, right? You are not the determining factor to allow me to get into a trade. Then what's the determining factor? Your your determining factor to get into your trade is interactions with your stocks, your future, your commodity, Bitcoin, its own structure. That's your rationale. My play is structured for upward price action. Got you. I would love to see, watch this, a pull back down into that structure that is wired for upward price action. Boom. I want to see the price action go into it. Boom. Now I know that the structure is upward to sustain upward price action. This move down can't sustain. And now we can come up. That simple. I want to see the interaction with that part of your structure that is severe. Watch this. Would you risk your life for a meal like lunch? Would you watch this? Watch the dynamic. Would you risk your life for lunch? What y'all got? what would you risk your life for lunch? Nah, I ain't that hungry. I could eat a little later, right? Might just get a little snack, right? Cool. If you were starving to death, would you risk your life for that meal to eat? Uh-oh, the context has changed. Look at the context. The context has changed. Oh yeah, I might have to get somebody these hands. Hold up, before the meal, watch this. There's a part. So what I trade in the stock market is that part that is severe. That part of you that is very strong, right? Where it's almost like the matter of life and death for who you are. In the stock market, that's your play's structure. It will be in an uptrend, a downtrend, or neutral, but that's the part of it that is very severe, that interactions against that part of structure holds. It's the defining mechanism that tells me what a play is. It's in a very strong uptrend, very strong downtrend, or its trend is changing, it's neutral. That we can do something else. So every single day in the market, I don't want to see the things that are like lunch. Oh, you ready to die for lunch? Those scenarios will not hold. But the scenarios where your structure is actually representative as a life or death matter, that you need to eat this meal or you probably getting ready to check out of here. Yes, show me what that looks like on a chart. Got you. I'm going to show you what that looks like on a chart, right? I'm going to show you what that looks like on a chart. That's what you trade against. So watch this. The things that would have that type of severity wouldn't be in something that's happened very short term in a 1 minute chart capacity, a 5 minute chart capacity. No, these things that would identify who you are as a core person. These things will be severe. These would be the things that you've been doing for the last decade. Those are the hard things to change. An addiction. Yeah, I can't just give up this addiction just like that. I'm just gonna let you know. I just can't give up this alcohol just like that. You know what I mean? Hey, I ain't gonna drink no more. Hey, I drink about 4-5 times a day. I'm not getting ready to give it up right now because I got a few good intentions. That's what you're trading. You're trading those things that would be severe for prices for a market's overall structure. You're watching how price action simply comes into it. That part of the structure that's very strong uptrend. Because price action and trend are two different things. You got traders using candlesticks to identify trending structures. They ain't gonna get the job done. All right. So we're gonna take some things you're gonna add on your charts real quick, and we're gonna do it bit by bit. All right. All right. So first off, I need to see trends because trends tell me the overall structure of a play. I need to see trends. So what I do is the following. All right. What I do is the following. So let's get up in there, baby. Let's get up in there. All right. So got you. What we first type in is simple. Literally SIMPL. That's good enough, right? From there we add simple moving averages. Now I know I'm gonna need the 5 SMA. Boom. The 10 SMA, the 20, the 50, the 100, and the 200. Boom. All right. So this is what it looked like on my chart. All right. So this is what it looks like on my chart. So essentially, I need to put those things in there. I just said I need to put those things in there, and I color coordinate them. Watch this, because I am not trading candlesticks. I know that the market moves from interactions with its own structure. Did you hear me? You make decisions in life based on interactions with your personality and character. Stop playing with me. This is why I tell you, you don't know how strong and powerful you are. You will be thinking that outside factors govern you. They don't. They form your structures. You understand it? They have to form your structure to be governed. If you're not structured to be governed by outside factors, guess what you're not going to do? You're not going to be governed by outside factors. They have to indoctrinate you so that you can be in a structured mindset to be, I would say, implemented into the way that something wants to then have control over you. Because if you are not, you can't put in, or better yet, you can't put out something that is not already within. That core concept right there, right? That core concept, missing. Watch this. You can slap me in my face. Watch this. You slapping me in my face, watch this, isn't going to pull out something that's not already in me. But you slapping me in my face will let you know what's in me. You see, you think that you're a cause. No, baby. You are an effect. What I do outside of me is an effect from me, my character, my personality, as a causing event. Okay? You now see effects. So most traders are trading effects. News just came out. Buyers randomly came into the play. Effects. Pattern formed. Effect. You have no insight on where your play gets power from. It gets it from how it's already structured wire for sound. So what we got here, we're going to put here and change these things up here on Thinkorswim with Charles Schwab. Boom. Let's put a 5 simple moving average. 5. I changed the color on that bad boy so I can differentiate between them. Make mine white. Put little dashes. I generally change the width to about 3. Boom. 5 simple moving average. You're like, what's a moving average? A moving average tells me how something is trending over the last 5 candles, last 10 candles, last 20 candles, last 50 candles, last 100 candles, last 200 candles. I need to see how price action is interacting with the trend. I'm not going to have insight on market movement without it. I will be trading some type of effect. You hear me? The effect of waiting 15 minutes. I will be trading the effect of a fair value gap. It doesn't have the severity. It doesn't have the severity of pulling into the inner core structure that makes up a play's movement. I keep saying it and stressing it so you understand the context of it. Oh, so the market just pulls into its own formational structure to get its movement? Yes. They playing with you if you think anything else. So now we got the 10 simple moving average. For me, my 10 simple moving average is, did I put the other one as white? If I did, I messed up. I'm gonna put that back. I put my 10 simple moving average as white. I put my 5 simple moving average actually as teal. See, look, y'all got me tripping. I put it as this teal color. I got it as teal. So I can differentiate between them. I put a 20 simple moving average. Zoom out a little bit so you guys can see where I'm clicking. Because some of my traders don't even be understanding why you got the moving averages on your chart. They don't even understand why I have it. And then they're not too sure of how I use it. Because then I'll see that they're using, watch this, they'll use one particular time frame that I use, and they won't base it in towards overall structure. There's a viewpoint that I have with trading, and the narrative is there's only one trend. It's the overall trend. I end up having to say this generally. I generally have to say this about daily. Watch this. You are only one person. You be like, I agree. I'm putting the 50 simple moving average now. I didn't put the 5, the 10, and the 20. I put the 20 as yellow. 50 simple moving average. We're gonna put that as orange. I color they're different colors so I can see what's what. 50 cent, the trend of the last 50. So we got the trend of the last 5, trend of the last 10, trend of the last 20, trend of the last 50. We got the 100 simple moving average. Trend of the last 100 candles. Come on. Plays pull into their own structures to move. For this one, I kind of put it as like a violet. I think mine is more like a violet color. For the 100. And my 200 simple moving average is red. It is red. All right, so let's show you what this looks like on the chart. Boom, scribble scrabble, right? That's what we got on the charts now. We got scribble scrabble, what some people identify as noise, not necessary, don't need it, lagging. Watch this, because they update on a 15-minute chart. These moving averages tells me what the trend is of these candles every 15 minutes. On a 5-minute chart, it moves, so we can look at it right now, right? This is the trend of the last 5 candles. The white is the 10 and the yellow is the 20. So the trend of the last 5, 10, and 20 candles. Price action is already up here. People will say this is lagging Indel. It's not really telling you why the price action is moving the way that it is, right? First off, look at this. Your price action all the way up there. Watch this. You don't know what the price action is going to do. Watch this, because your trend is all the way down there. This is a dynamic that if you don't understand how to use moving averages, good luck. So most people don't really like to use moving averages, or they're not going to use them because they believe that they give lagging information based on how they update. You're anticipating that maybe coming into a moving average, look at this. You anticipate that maybe coming into a moving average, you're going to get a bounce if it's coming up at you, and then it'll bounce. And there's other times, look at this, where you may have thought that this pullback move here would have got bounced, but you actually see, not in real time, you see that this thing starts curving on the back end. So it was up like it was before, bounce, bounce, look, bounce city, bounce city, bounce city, bounce city, bounce city. By the time this thing starts knifing down, I promise you, you didn't even get this curve in real time. You didn't get this curve in real time. Y'all see how that line is now curving to show you the severity that that price action shows strong, that is breaking that structure? Yeah, you're not even getting that in real time. So you're probably like, yo, make it make sense. Why would I want to use something that doesn't update in real time? Mm-hmm. Why would I want to use something that lags in what it shows me? Sounds like I'm setting myself up for failure. Once again, you don't know how to use it. You can't use it from a standpoint that you would pull up one time frame. That's equivalent to saying that you know someone because you met them 5 minutes ago. You know someone's life story because you met them a minute ago. You know someone's story because you met them 15 minutes ago. You know someone's story because you met them 30 minutes ago. You know someone's story because you met them an hour ago. It makes no sense. There's no context there for you, baby. There's no context for that. You will never be able to know them. You only know them from the perspective of time that you're interacting with them. Got you. So thank God that this is not the stock market. You would be screwed, right? I need to look at price action from a standpoint from how we interact with all its time frames. So for me, once again, I'm gonna say it again. I'm using these moving averages from a 1 minute chart perspective, a 5 minute chart perspective, a 15, a 30, a 1 hour, a 4 hour, a daily, a weekly, and even further if need be. So I can see the entire picture. If I try to find my favorite time frame that helps me to enter trades for upward or downward price action, I'm going to be screwed. I'm going to be making assessments on partial information. I am screwed, right? I'm putting my money on the line for something that I see because we interacted with this time frames, whatever, independent of its overall structure. You're making an assessment on someone from how you see that they're moving over 15 span periods. Okay. Have they been longer than the time frame that you're analyzing them on? Yeah. But you got it all figured out. I got it all figured out. Okay. It makes no sense to me, but we'll see how this plans out, right? No. So with the stock market, we're gonna look at multiple time frames. All right. Now watch this. We're gonna cut to the chase. I'm gonna cut to the chase here because you get paid, watch this, from interactions with very severe trends. What do you mean? You get paid because of interactions with the strongest parts of the trend. Because what does everyone and their mother want when they trade? They want to either get paid from the market, watch this, given a strong move to the upside, okay? Or get paid, watch this, from a strong move to the downside. Oh, that's all you want? I get paid real nice when I guess big moves to the upside or big moves to the downside. That's it. That's it. You want to complicate this thing? I don't want to complicate it. How would I get that strong move down? You're going to get that strong move down because you have an interaction with a strong part of your play's trend. You have an interaction. How do you get that interaction? You form trends. You get upward, downward price action to come into a downward trend or a trend that even becomes neutral. What is that? You can have a very strong uptrend, and then if the uptrend dies, the trend that helps to reinforce it, if it dies, it goes neutral. You're not going to stay up no more. You're not even going to sit sideways anymore. You're going to fall down. The building loses its foundation and pillars of support. It's not going to consolidate in the air. It's going to fall down. Strong move down loses its foundation to stay down, its reinforcement to stay down. It's coming the hell back up. That's how powerful trend is, right? So when you get those massive moves to the downside or massive moves, one of two things. That's why we need to do these lives. right? So you stop guessing that why my play is moving the way it is. Like even the NASDAQ right now, I know this play gonna be coming down because I can see how it's interacting with the daily chart structure. That's not in a uptrend. NASDAQ, hey, your time is measured. Your time is measured. You're gonna be coming back down into that 4 hour chart trend. I can already see that even right now. But check this out. So you're just basically, watch this, you're just basically trying to get paid for strong upward moves or strong downward moves. Stop playing with yourself, right? All right, so check this out. How do you get it? You get it from having interactions with the higher time frames trend. Who's the higher time frames trend? That's going to be between your 4 hour chart, your daily, your weekly. Between your 4 hour chart, your daily, and your weekly. All right, so we got some moving averages on the charts. We got some motion for you, right? All right, so we need to cut a little bit of noise still. I need to tell you guys what an uptrend looks like. I don't want to spend too much time with it. Even on this live education, I don't want to spend too much time on it. Like, damn, I don't want to spend much time on it because it's something that you just gonna have to take me at my word. This is what an uptrend looks like. Uptrend looks like the following, where the 5 SMA leads, the 10 simple moving average is in second place, and the 20 simple moving average is in third place. That's what an uptrend is. The 5 simple moving average leads above the 10 SMA, which is in second place in this formation, and the 20 is in third place. All right, so if I have a 5 SMA that leads, a 10 simple moving average in second place, and a 20 simple moving average in third place, that, my friend, is an uptrend. Not this. This is not what I want. This is what most people teach you. Higher high, higher low, higher high, higher low, higher high. This is what most people teach you what an uptrend is. You're not going to have context behind using this like the moving averages. I run laps on this. I eat this for breakfast because the intel I get between the formation of these moving averages is severe in comparison to this. And then you get even these people who will draw trend lines. Watch this. They believe that this play can't break down until it comes through the area where it keeps bouncing. The touches, right? You got those people. Watch this. And then when they think it's going to give, because it respects that trend line, it's going to do this and either bounce back up first before breaking down, right? You got those people. They'll think it has to respect it before, so you'll still have time to get out safely. Watch, and then you got another group of people that use them damn trend lines. You got the people that think that it's so important, watch this, that when it breaks down, it doesn't hold up anymore. It will at least go back and retest and then go and break down even further. Yeah. How do you know? Been on the wrong side of all that. Been on the wrong side of all that. When it broke down, it's gonna at least retest, been bouncing, respecting the area. Surely it'll break down. Surely it won't today. You got subjective based trading styles. We don't want that, all right? So even on this live, I'm screaming to you, pay attention. Your play wants to give you a strong move up or down once it interacts with this higher time frames trend. And you're going to have to validate it. You're going to have to qualify it. You're going to have to even see if that interaction that you get with the trend is valid. Now, let me share with you a real quick concept on how you see that that trend is valid. All right. So watch this. If this is my 4 hour chart, if this right here is an uptrend and it's on my 4 hour chart where the 5 SMA leads, the 10 SMAs in second, the 20 SMAs in third place, I see price action doing a strong move down into that trend. Candlesticks. Boom. You would say to yourself, now surely they know that this damn 4 hour chart's in an uptrend. They're not going to bring that down with price action. They surely will. They surely will bring that price action into that higher time frame trend as if they don't know what's going on in the first place, right? They will. Traders do it all the time. Why? because they have basic candlesticks. They believe that anything's possible. Okay. They believe they do. They got basic candlesticks. They believe that the movement, the volume, size of the candles, right, is the determining factor as to how the plane sustains upward and downward price action. They believe that mass movement controls all, right? But mass movement can also lead to a slaughterhouse because it doesn't have the backup to sustain what it's doing. And people think that the market is manipulating, right? Now check this out. There could be a scenario where I would say to myself, hey, this 4 hour chart has an uptrend. We should bounce from it, right? So you see price action come into it. And I think that now the price action is going to bounce back up because look, that 4 hour chart trend is in an uptrend. You need to qualify that. What do you mean we say qualified? You better not have seen, watch this, that your play had a very strong interaction within a time frame that's even greater than that 4 hour chart. What do you mean? Here we go with the next part of the lesson. You have to qualify trends. You do it at your job. You'll deal with your coworker differently than your manager. You deal with your manager different than probably his manager. Why? Probably because you want to keep your job. You know how to push the limits. Babies know how to push the limits. Baby may wild out against you, but then mama come, he ain't trying that. A baby has context. A toddler has context of who to mess with, who to push the limits towards. Oh, you thought I was gonna give you some little winky dink type of lesson. Nah, there's context. There's context for how you know, oh, today is I'm getting a massive move to the upside. Context to we're gonna get a good move. Context to we're gonna get a struggle move, but it's gonna go up. Context to we're gonna fake out and go into upward price action. You get all that? Yeah. You don't come into the market blind. You see the structures that empower your play. They give you context, right? They give you context for how your play is essentially going to move. They give you context. It's not we come into the market and then see how the market wants to respond towards how buyers seem to be participating today for upward or downward price actions. That's bullcrap. As we made the assessment earlier, you don't do that even in life. People mess with you. Watch this. Something comes out from them messing with you. I'm sad and sorry to tell you it's because it's already in there. They're not pulling out of you what's not in there. No, but they put it in me. No, they didn't put it in you. I was feeling good. They made me angry. I'm sorry to tell you, got angry already inside of you. They just pulling it out. You're already equipped to respond because it's already in you. Okay? It's not the other way around. I know. It ain't even about them. It ain't even about them. It's about you. If it wasn't you, you wouldn't respond that way. Got you. All right. So when all we do in the market, watch this. All we do in the market is see how big groups of buyers or big groups of sellers pull into that strong part of the trend, not anybody's trend, not the trend that comes from smaller time frames, not a 1 minute chart through a 1 hour chart. Watch this. I could care less. Why? We already made an assessment. If you've been trading for a while, or even if you're new to it, guys, you want the big moves. I promise you. Guys, you want the big moves to the upside. You don't want to be playing around with $2.50, right? Oh, that was nice right there. Time to get out. You don't want that. When you start making some good money in the market, it's because you're able to catch the bigger moves that happen within the market. How you get it? You get interactions with bigger structure. It's that simple. Interaction with a smaller time frame structure. Oh, 5 minute charts in an uptrend. I like the move we can get from there. I gotta have more contacts. Watch this, because my big moves that I be wanting, they always come from higher time frame interactions. Does that make sense? Does that make sense? Man, please let me see you do something in regards towards watch this. We limited it. Let me see you interact with the 4 hour chart. Let me see you interacting with the daily chart structure. Let me see you interact with the weekly chart structure. We already taken off the board interactions with smaller time frames. You're not gonna give me the type of move that I so desire. When you go and you apply for a job, you apply for a job because you like the benefits. You do. I like what they can pay me. I like to have the health care package. Got you. When you trade, because you like what they offer. Watch this. If they're not offering an interaction with the strong, severe structure of a 4 hour chart, daily, weekly, watch this. Hey guys, I ain't catch nothing today. Watch this. It wasn't for me. That ain't my play. You know, I don't work for anybody. Watch this. You start saying stuff. All money ain't good money. I'm not playing with you. That's what you say. All right. So when I tell people routinely, when you are going to be consistent in trading, is because you know exactly what to look for. Does this make sense for everybody? You know exactly what you're looking for. Hey, I want to see that 4 hour chart, daily chart is in a downtrend. I don't know what to look like, what to look for with the moving averages, right? I want to see that thing coming down at me, and I want to see price action coming into it to interact with it. Boom. I want to see how that interaction causes, watch this, smaller time frames to get into downtrend formation. I want to see how, because they're going to get into downtrend formation first. They're going to get into uptrend formation first, right? From that interaction. So if I interact with that trend on, let's say a 4 hour chart is down, my 1 minute chart is going to get into a downtrend formation first from that interaction. My 1 minute chart is going to do it first. Why? Because we're not using silly candlesticks. We're not using silly candlesticks. The moving averages will take this formation where the 5 SMA leads for downward price action. The 10 simple moving average is in second place, and the 20 simple moving average is in third place. You're going to get into a formation from that interaction on the 1 minute chart first, then the 5, then the 15, then the 30, then the 1 hour from that interaction. It's an assembly line. On your march, get set, go. 1 minute chart can get into trending formations first because it moves with candlesticks in a 1 minute time frame. So you can get yourself into trending formations first. However, we don't want to take moves just because a 1 minute chart gets into an uptrend or downtrend. We want to take the moves from the power source. Your plays have power because they fall into the trend of higher time frame structure. So even for the point of this live, because I ain't even got time to play with you, the good thing, this will always be inside of the live tab on the page. You can look at it sparingly. When you get the time, beautiful, you're going to start seeing a narrative. Watch this. I was asked earlier this question by one of my students. He's like, how do you get your psychology together with trading? I made the example immediately. I say, is this a question that you would ask a person who builds homes? Hey, how do you get your psychology together to build this home? You say psychology. You mean knowledge to build a home? The stock market is on the same vein? Yeah, it's on the vein of having the knowledge to know how it gets into its move. Knowledge. I've been reading these books about psychology. You can read all the books you want to about psychology. If you don't know how your plays set up the power to move, you're going to need more books that teach you about some knowledge. This is not a social experiment. You hear me? This is not a self-help book in regards to, hey, fix my mindset, calm my mindset down, I can take better trades. This is how people get into essentially these, I call them multi-year, before you know, you've been trading for multiple years and you find that you're making little to no progress. Why? Because you're not hitting the things that matter to make you progressive. You know what's funny? You could be doing the wrong thing for years, hit the right bit of information, voila. Different trader overnight. Watch this. It's not from the standpoint of how long you've been doing something. It's from the knowledge of having insight on how to do something that makes the difference. It's not a flex that people will come to me and say, I've been doing this for 20 years. What the hell you know? Oh, I know this play is going down today. Oh, we'll see. Okay. Much. I, y'all don't even understand the interactions I've had with people. Okay, I've been doing this for 20 years. Mm-hmm. Yeah. What's that, my guy? What's that? Ding ding ding. What's that? Oh, you left the chat room, right? But you've been doing it for 20 years and had the nerve to argue with me. Okay, I got you. Right? It don't matter how long you've been doing something. Do you have the insight to know why the play is doing what it's doing, why it's not equipped? Because it's not opinionated. The market is not opinionated. I used to think that the market was opinionated. I used to think that the market moved based on momentum. Oh, if it gathers up enough momentum, it just continues. Your play is literally equipped with full bodyguard security protection to do what it does. You understand? All right, got you. All right, so you gotta understand trends. So the higher time frames, they will set the notion that it's just that easy. You want to make certain types of money from bigger upward moves, bigger downward moves. That play is going to tell you a few things. First off, before I even go a little bit more, because I do want to look at a few plays here for you with you guys and building up this. I always set stuff up because I understand that people have to understand from things in there. It's like with trading, it's the weirdest thing. People have to understand based on, and anything that you teach, people got to understand things based on how their mind works. So I'd like to give different examples because if I come in everything and just trading terminology, you're not going to get it. You understand a lot more life principles more so than you do trading. And you understand a lot of things about life that you need to understand what that looks like on chart, right? So you can have the ability to be like, oh yeah, I need that to happen when I'm teaching students. Because if I can't get that, you're not gonna have the reference points. Watch this, you're not going to be able to remember it. You're not gonna be able to apply it because you're looking at the stock market independently from how you're looking at life. This isn't going to work. It flows based on the same criteria that you have life examples. It really does. I always tell people it's like a building. You're not asking questions while a building is up. Shit, they built it. They built the foundation. Watch this. The even how high that building was going to be built was based upon how far that building had to come down into the earth first. There's a literal formula, right? There's a literally a formula as to how a building is constructed. That watch this makes you not ask no questions when you see a building that's standing in the air. Watch this makes you have no doubt that when you get into that building, you're not saying, "Who's the builder?" Why? Why would you do that? Because you know that the building even has a code that it has to have the right permits, had to get approved from the city, the town to be built. You don't come in there, you don't come in there pushing the building before you let me see if it got a little sturdiness to it. No, you come in that building, get on the elevator, all up through the escalator, top floor, middle floor. You ain't asking no questions. You see a chair, you just sit down because you understand it. These things have to have, they have to already be built a certain way to do what they are inclined to do. Got you. We ain't doing nothing but understanding the formula, the recipe that allows a strong move up or a strong move down. So no, it's not opinionated, and it's not something that I'm actually going to be then thinking of that I have to have a certain psychology to be able to take that trait. It's based on me. No, it's based on me having the knowledge of what forms it. It's like a building. The recipe for it. What forms the recipe to make this type of dish? Well, if I come with all the ingredients to make the recipe, you're not gonna be surprised when it's in front of you. Right? Got you. That's what trading is. That's what trading is. Not the randomness that people throwing in ingredients. The Big Bang Theory. We got a strong move up today, right? You'll be surprised what people think that trading is. You'll be shocked. You'll be absolutely shocked to what people will think that trading is, right? But trading is nothing more than watch this. If I get a big move up, I have a big move down first. that comes into structure that is not downtrending, that's what helps it to reverse back up. If I get a big move, if I get a big move down, I had to first have a strong move up into a structure. It's two structures, either a structure that was already a higher time frame trend is downward, or a higher time frames trend is essentially it was trending, but then it got neutral. Neutral is like when this 5 simple moving average, look at this, we got a 5 simple moving average, it starts to go flat. You see how it starts to go flat? How the price action was doing good, and then it starts to come back down, right? So an uptrend has essentially, for me, it has 3 parts to it. It has a 5 SMA, it has a 10 SMA, and it has a 20 simple moving average. So if the trend of the 5 SMA breaks, the trend of the last 10 candles can catch it, and if those two break, the trend of the last 20 can catch it. If you need context, though, we'll give a little bit of insight further along about two critical areas on the chart, and these are the only times where I know that my moving averages in showing me something can be delayed. In showing me something can be delayed in what it's showing me. Y'all see this? You be like, all right, Reggie, still got that 20 right there. Yeah, we about to smoke that. All right, we'll give you context on that shortly coming up. All right, we'll give you context on that one shortly. All right, so once again, just so everyone's on the same page, how does my play get its power? It's going to give me a strong move up or down into structure. Whose structure? Write it down. Rewrite. This video will be always in the live section. You'll be able to replay it. You want to pull yourself into 4-hour charts trend, daily charts trend, or weekly. You're going to be pulling yourself into a higher time frame structure to get moving. We went over some core concepts in this live. Trend is not just a 1-minute chart, not just a 5, not just a 15, 30, a daily or 4-hour chart. There's only one trend that your play has. It's its overall structure. Unfortunately, the human mind can't contain the fact of seeing things in its entirety. Watch this. You divide your entire life by past, present, and future, but ain't got but one life, because your mind can't handle it all. Your mind can't handle it all. So you want to, watch this, split up your own life. Past, present, future all got something in common. You. But because your mind can't process it, that's my past. That's a category. That's my present. And what I'm moving towards in the future. What's the future? The future is the accumulation of past and present events. Stop playing with me, right? That's what it is. All right, so the stock has one trend, its overall trend, and it simply moves into its trend. Oh, its overall trend is up, literally. The price action will move into the overall trend of that play. This is where it gets deadly, because traders want to look at certain time frames to make a decision. This is what I see on the 5-minute. You see it happen all the time. This is what I see on the 15. You not gonna have insight on overall trending structure. You'd be like, how does your mind calculate that? I can see it, because the way that works is that the overall structure of a play has an assembly line, where essentially you can't take on step 4 until you officially completed the steps of 1, 2, and 3. So I will know at any given time with your overall structure self where you are in the midst of it. Oh, we're taking on the daily charts uptrend. What do you mean you're taking it on? The daily chart is in an uptrend, and I see price action have a strong move down into the daily charts uptrend. Okay, wonderful. Market is an assembly line, so I know the following. 1 second. I know the following, that essentially you have to already be downtrending. Watch this. To take out that daily chart, you got to be already downtrending on the 1-minute chart. Step 1. 5-minute chart, step 2. 15-minute chart, step 3. 30-minute chart, step 4. 1 hour chart, step 5. 4-hour chart, step 6. Now we can take on the daily charts, step 7. Assembly line. That's how powerful the market is. It has one overall structure, and I need to be able to see based on how price action is interacting, having strong moves up and down. Where are we? Where are we? This is why I have such concern for most traders and how they trade. You got a trader that's looking at something because they maybe like to take trades from a 1-minute chart, 2-minute chart, 3-minute chart, and maybe they'll look at the 15. I use the 3-minute and the 15. I be pausing. You should see my face. I just be pausing. So you got the entire picture there, bub? Yeah, I'm gonna see how we get some price action. I'll be able to enter once I see the 3-minute chart to alleviate some of the noise. And I'll see how we interact with this 15-minute chart. As if, watch this, what you see on that 15-minute chart is somehow independent of the 30. It's independent of the 1 hour. It's independent of the 4 hours. It's independent of the daily. Because you take trades just for based on what you see from a 3-minute chart and a 15. This is no context. The market structure is a chain. If you guys ever picked up a chain, you pick up that chain, it got a lot of different links. But watch this. They're all connected. That's why they call it a chain and not chains. That chain has many links. That even if you begin to move certain parts of the link, you move it in context to how it then has to start moving the entire chain. There's going to be limitations as to how far you can move unless the other parts of the chain can follow suit. And there's a saying that chain is only as strong as its weakest link. Watch this. You're trending on the 1, 5, 15-minute chart. The 30-minute chart cannot get into the trend. Can't get into the trend formation. Well, we're going to slow down. Why? Because every part of that chain, believe it or not, is connected. I know you're a 3-minute, 2-minute, 1-minute chart trader looking at the 15-minute chart. You're not going to have enough context for why your play can sustain the movement that is giving. You're not going to have context. I know my plays where they are any given moment. I can just take a look at the structures. Is this the sexiest thing? No, because you got traders out here wanting to trade based on candlesticks but they don't see where that play is within its own structure. That's deadly because now you don't have context. You don't have context to what type of movement that you can sustain. You don't have context to watch this where you're getting that very important demand and supply from. That's giving your plays the power. That's your power. You're not asking questions if you see your plays get the power for upward and downward price actions as to why you're getting it. Right? You're not going to be surprised that some people put some ingredients inside of a pan, watch this and make it, and damn, you say, damn, this tastes like a cheesecake. And I'm so shocked. You're not shocked because they put the damn ingredients for a cheesecake in that damn pan, right? Are you surprised by a strong move up? Not when you know what the ingredients is of a strong move up. Got you. Look at context. You look at the context of your market structure, and you don't look at the context of what you see from silly candlesticks. You're not going to have enough intel. You're not. Oh, it's just a day that we just continue to let it rip out. Well, I saw it had momentum, so I just lucked out and rode it on down today. You didn't know it was going to run out down? Nah, it kind of surprised me because you don't have the context. You understand? You need the context to know that, hey, this is a day where shit, you got the whole one, keep the change. You gotta have context. You gotta have context for that. All right. All right. So let's look at a few plays here real quick here too. But before I do that, I do actually want to show you guys one of the things I'm using on my charts that gives me very easy context on market structure. I'm at least going to introduce it on this live because I'm gonna have to do more videos and I'm gonna break down bit by bit. I'm not going to do all the intel about how I look at charts and different things just in this one thing, but I'm gonna give you a lot of core stuff because there's a lot of core stuff I can give you guys right now that you can use watch this tomorrow, right? This core stuff I can give you right now. Core stuff. First video you ever watched, right? From me, you get core stuff. All right, so check this. Look at what I'm adding to my chart. It's called a Bollinger Band. Its inventor doesn't know how to use it like me. I know that's bad, right? It's inventor, the person who invented it, don't know how to use it like me. But the fact that he actually invented it, wonderful. All right, now let me tell you what it does. Let me tell you what it does. And you need context on it, what it does too. I don't mess with the settings. People always ask me, do you mess with the settings? No, I don't mess with the settings. The settings for this Bollinger Band gives me two essential lines. It's called two standard deviations. And those two standard deviations that the play essentially has, right, it tells me essentially based on historical intel of where the play is having strong areas of volatility above it, strong areas of volatility beneath it, aka supply and demand. And if we can do what we call ride the Bollinger Band, which I'm going to show you what that looks like, it will tell me that that play is trending. It will tell me that that play is actually trending. All right. And I make both of my bands white. I like them to be white. All right. Boom. And let's apply that. So this is what my chart now looks like. Boom. Someone will say a disaster, right? Someone say, oh, nah, he's really done it. I didn't like the lines. Now he's had the Bollinger Bands. Oh, God, he's doing too much. All right, got you. No problem. All right, so cool. Check this out. The Bollinger Band helps to cut a lot of the fluff for me, and it gives me insights on why plays were struggling. So even today, like with the NASDAQ, right? When this thing pops up, this play for some people will be having a magical move back to the downside, right? As the play actually opened up, and then it had this move coming back down. Watch this. I'm a multi-time frame trader. Right there, you have other traders saying, yeah, me too. No, you're not. I literally always have up a 1 minute chart, a 5 minute chart, a 15, a 30, a 1 hour, 4 hour, and a daily. I am not switching between those different viewpoints. They're always up. You can have other traders that have about 8 different charts up on one screen. I promise you, you're not getting the type of intel that I'm looking at. I promise you, you're going to be a reactive trader. I promise you, you're going to be seeing how your play interacts with the key level that you've drawn to see what it does at that area to take your trade. I'm going to see every little nook and cranny that was going to happen on my charts because I can see what it's coming into, which you need to do as well. If you're a market maker, you're not surprised how the market moves because you can literally see where buyers or sellers are sitting anywhere on those charts. Yeah, we got a $400,000 buying pressure at this area. You're not guessing that then when the plate comes there up, we're only coming down with 200,000 of selling pressure against 400,000 of buying pressure. We're getting ready to get yoked back up. You're not even debating. But you don't got that type of intel. Watch this. You don't have that type of intel as no retail trader. Unfortunately, right? You don't have it. So this is where people start saying, well, I see the level two. Level two ain't gonna tell you about those hidden sellers in the market. Stop playing with yourself. But I got dark pool. Listen, I don't care what color your pool is because you ain't get it cleaned, right? I don't give a damn what you got that you think is helping you get the edge, right? You got people saying, what's the edge? You need an edge in the market. I don't need no edge in the damn market. What I need is to be able to see factual based intel. That's the damn edge. I can see that this player is equipped to sustain downward price action. Literally booby trap to sustain downward price action. That's the edge, right? It's not because what's the edge? What's the magic tool? You got traders that come in looking for magic tools. Ain't no damn magic tool. Magic tool plays enforced by institutions and multi-trends to sustain itself for upward and downward price action. If you want to call that magic, right? Hey, the person has a full security force to shoot on sight anyone that stands in his path. Gotcha. You want to call it magic? I want to call it full arsenal, right? To do what the hell is doing. Gotcha. Makes sense. All right. So I use Bollinger Bands. Bollinger Bands will tell me essentially what's key areas. I want to show you guys something real quick here on the 5 minute chart to give you insight because we had a move that popped up and then it came back down. And the 5 minute chart was already telling me that because I use different time frames because it differs. Watch this. Every time frame has its own demand and supply areas. I know contrary to belief, right? And that's a major thing that I just throw on you like it's just a routine day in the park. Every time frame, 1 minute, 5 minute, 15, 30, 1 hour chart, 4 hour chart daily has its own demand and supply area. Why you say stuff like that? Because people will give you some BS. The play is at demand. People will tell you that this play is at a demand area. I need context, baby. Who's the man? Watch this. All demands are not created equally. All supplies are not created equally. All trends are not created equally. Damn. Don't you tell me nothing different. We in an uptrend. On what time frame? On the 1 minute chart. Oh, is that the same as being on the uptrend on the daily chart? Hell to the no. Hell to the no. Context. Gives you context to start understanding why you get the type of reversals that you do. You need context. Oh, we pulled into the 5 minute charge trend. Okay. We pulled into the 4 hour charge trend. Look, we got sound effects in the room now, right? Got to put a little stank on the voice for that one, right? Yeah, because it's more of a severe. You need context. What do traders do? You're not hearing traders giving you that type of context. Damn, boy, that market really threw me off today. That's what you be hearing. That they trying to figure out why the market does what it does. Nah, bro, you have the ingredients to do what you do, and it's not subjective because you have to get into entire formations to do what you do. You're not going to be able to do it if you don't. But news came out and the market was just ripping to the upside. There's a whole catalyst for that. Even that news, you've already been in a strong downward move. Boom. I don't even know what the news is. You moving like that? Got you. You've already been in a strong move down. You lost the trends that were holding that play down. You lost all of them. You lost them. And in losing those trends, watch this. There was no reinforcement. When the news comes out, the news already has the fuel for upward price action. Look at this. I know you would even want to highlight news for why your play would give you that move. It already has the correspondence. A bunch of shorts. The loss of trend on multiple time frames that's holding it down. That when the news comes out, the news helps to release what the play already has inside of it. I told you, with trading, they're going to get you thinking that outside forces actually causes your play to do what it does. No, baby, it's already inside of it. It's already inside of it. Your play already has what it needs. Watch this. Release that same news and still have multiple downtrends in the way. You know what's going to happen to the news, baby? You know what's going to happen to the news. Let me show you what's going to happen to the news. You still got multiple downtrends and you release the news. Positive news is supposed to bring the market back up. Hey, baby, we going to come right into that nasty trend and get yoked back down until we break it. Shout out to the news, right? That's why when you have these incredible catalysts that come out in markets, yeah, trends oftentimes already are compromised and neutral to benefit from positive news. What a coinky dink, right? Trend is already broken down the downtrend. You're in a neutral state. Neutral state allows your play to get busy because you're not coming into underlying resistances and underlying supports. Those big news events that you say, damn, I wish I could have been a part of that. Yeah, I'll be looking at the market structure. Market structure will already be in alignment to allow those news events to get going. It's not the other way around. You release your positive news and have multiple downtrends coming at you. Well, you're going to use that positive news to break down the multiple downtrends. You're not going to benefit from it. You're not going to benefit from it. Random things that happen. You would think it's random. They just secured a deal. Partnership. You look at the structure of that play. That structure of that play is equipped to receive that news for the further continuation of that move without contention. It's bad. But you got to understand this. When you do the same thing, if you had insider information, right? That your play is getting ready to sedir like Palantir, you're getting ready to sedir some type of massive contract. Got you. Those people will already neutralize multiple downtrends. That news will come out in some type of neutral state across the board. You ain't got to go uptrend. It just has to be neutral. Neutral means that whatever strong downward move that play had, it doesn't have the force to no longer hold it down. The magical news doesn't come out, watch this, in any of that multi-time frame downtrending SMA look. It comes out magically when the damn play has neutral trends across the board. Magically, right? What a coinky You ain't gotta do much research. If you wanted to Google that when the if you I mean you can Google search it before the news came out, when I think initially that there was a treaty that had been formed between Iran and the US, that the market had magically received millions and millions of shares that came in 5 minutes, 10 minutes beforehand. You ain't got to it ain't talked about like that. You had a few news outlets that made it public information, and that's about it. Because it always happens, right? It always happens that way, right? And let me see something real quick here too. I want to see because I think Palantir came out with earnings today too. I want to take a look at their structure real quick. Because you would say to yourself, man, I can't believe, watch this, I can't believe that Palantir had this wonderful news. Man, I knew I should have played Palantir. Watch this. Palantir is going to be in a formation. Watch this. Look at the formation. Listen to me. Stop playing with me. Palantir is already in the formation. Listen to this. Palantir, why you could come out with them earnings? Watch this. Why you couldn't come out with them earnings while you had all this going on? Look at this. Look at this on the 4 hour chart. Got the nasty downward SMAs, supply. Watch this. You're not coming out with that. Because then people know that them earnings gonna be rocking. Then people know you're not coming out with all this nastiness that you'd have to use. Look at this. You have to use your power to just start to break down the trend and break down that narrow Bollinger Band that represents supply on this daily chart. You're not gonna do that, big boy. You're gonna come out when that damn trend has the ability to go look at that V-shaped recovery and get the benefit of being able to break out. This is a neutral state. This play is neutral. You ain't got no 1, 5, 15, 30, 1 hour chart, 4 hour chart coming at you with no downtrend. You ain't got that going on. This play is they already broke it down. Look at that. It's already broken down. You're already on the verge of riding the Bollinger Band. Look at this formation. Look how bad this formation is, even without the news. This was the 9 o'clock candle, right? And this is the candle that's showing here after hours, right? This is a formation, even without the news of the earnings happening here today. Watch this. That is going to go up anyway. Guys, I need you to see this. They came out with earnings. This play is already destined to go up anyway. How do I know? That downward move that you have here on Palantir cannot sustain downward price action because you're not in a downtrend on the 4 hour chart. When you get strong moves up, your higher time frames are trending and you simply have a pullback into it. You can't sustain downward price action. So those shorts get used as fuel. All right. You don't ask questions. Listen to me. You don't ask questions to then why you see that the move is coming back up to this area. Look, it comes back to the area. You understand. Oh yeah, they came into that trend. Boom. They get in reverse. We're going to come back to the area. This is when you should ask questions. Let me show you. This is when you should ask questions. Where are you getting the fuel? Watch this, to have a much further move to the upside. I understand that you use these people coming down into trend, and that's the reason why we're back up to where we started. Got you. Well, your play gives you follow through. You might want to write this down. It's called resting liquidity. Your play has already had a massive move down, even beyond that area in the past. You have more fuel that you're going to squeeze those traders for the further continuation of that move. So when you look here at Palantir, even with earnings and all, right? Let's remove some of the drawings I already got. I got 1,000,001 drawings on this chart. Boom. When I look at the chart, I ain't got to do nothing but watch this. Look over. Hey, Palantir, you look like you got a bunch of previous shorts to squeeze the hell out of to give yourself the fuel for upward price action. Watch this in correlation to the news. News will never address the situation of where your play essentially is still getting its fuel from. You will think it's just from the news. Watch this. News comes out, boom, you start powering up from down here. Watch this. All this additional follow through that your play has is not coming from what you just had equipped at this area. There's more fuel sources along the way. There's other gas stations that we're pouring in from to still get this continuated move. Watch this. Someone ain't still looking all the way back down there with a telescope and say, you know what? Let's keep the party going. It's not happening. Your play has more gas stations to fill up from. Watch this, because it's already squeezing big groups of previous sellers for upward price action, for downward continuation moves. You're always going to see it. You are squeezing the hell out of these buyers for the further continuation of downward price action. You're not pulling it up because you have just no damn momentum. You have trends that you fall back into to help you get back to work. What is getting back to work? You pause. Look, you pause here. Why you pause? You pause here because you pull back into the trends that reinforce the play to continue going back down. Got you. Then you get back to work. What's work? Squeezing big groups of buyers for the further continuation of the move. This is why it's so important that plays have reinforcement, because they'll hit structures that make them want to stop getting back to work and squeezing big groups of traders. So they need the trend to help reinforce the move to get them back to work for the further continuation of the move. Resting liquidity is just as important as the areas that you get power from to give you the initial upward and downward move on these plays. You got to already still have the continuation fuel for the further continuation of the move. That's whenever you look at a chart, you ain't got to know nothing about nothing. Hey, this play gave me a strong move up today. Look at it, gave me a strong move up today. You don't start looking just in highlighting this area. You understand already the narrative. There had to already be a strong area on the chart that we use for the further upward continuation of that move. You ain't got to do nothing but go back, look towards your left. You know, surely is. We got a bunch of sellers that we can use for the further continuation of upward price action. We sure do. We got a lot of them. I see them. They there. Look at that. They're there, right? You get out of this game that you start thinking that your play randomly give it a good booyah. You get out of that narrative. You understand, damn, they've been playing with me this whole time. You understand that, okay? You understand what it is. You understand the narrative to what allows your plays to get the movement that essentially that they get. All right. All right, cool beans. All right. We're going over so much in this that people, it's good that people will be able to like continue to tap into the live section of this video, that you guys can do it sparingly and at your own pace, because there's a lot of gems that, you know, I give in these videos. And the thing is, you'll be able to go back to it. I think this one has already been about an hour and 30 minutes of free intel that you'll be able to see. Stop playing with yourself. All right. Stop playing with y'all. But I think that what I just gave you guys there, even on this play with Palantir, was massive, right? It was massive. And let me give you guys a random play here too. I don't think they came out with earnings. I don't think they came out. Did they come out with earnings? Let me see. I wanted to see something with Snap here real quick too. I'm about to wrap this video. Yeah, they did come out with earnings, all right? But it's under the same PS guideline. It is. Bruh, before the earnings come out, you're not in a formation to sustain downward price action. On this on this daily chart, look at it on the daily chart. If you were in this formation on the daily chart, right? If I was in this formation on the daily chart here for Palantir, let me tell you what would have to happen, right? Let me tell you what would happen because of this formation. This formation is, I would still give it, technically speaking, I would give it a buyers. I would give it a buyer's neutral. All right, so let's talk about. I gave you guys some of the trend information already. I told you guys you have essentially an uptrend, downtrend, and neutral. There's two other trends that you have. They're powerful. It's a buyer's neutral and it's a seller's neutral. Right? A buyer's neutral will be like this. You have. I can actually just show you on the chart. You got a scenario. It happens all the time. Look at this. This would be. Let me take out that one Bollinger Band. I was wondering where that color was coming from. It actually was plotted the 20 SMA. Don't want that. Got you. This is a downtrend for Snap. 5 SMA leads, the 10 simple moving averages in second, and the 20 simple moving averages in third place. That's a downtrend, right? So I got these downtrending SMAs. Watch this. The moment this 5 SMA goes flat, the trend becomes at that bottom, it's still neutral. You still could have other time frames that still technically downtrending, 10 a simple moving average, 20 simple moving average. But that 5 SMA means that I've already started at that very bottom, neutral. Trend is neutralized, right? When you get this V-shaped recovery, y'all see this? V-shaped recovery. See how it was looking, all right? We'll zoom back out. 5 SMA leads, 10 SMA second, 20 SMA third place. I get this V-shaped recovery. Buyer's neutral. It's a neutral trend, but buyers are in control. So if you go up here and you hit resistance and you come back down, those sellers can't sustain that move because buyers are in control. You actually empower the play for further upward continuation. You got the same thing that happens the other way around for a seller's neutral. It's where essentially you are in an uptrend, 5 SMA leads, 10 SMAs in second, 20 simple moving average third place. 5 SMA essentially starts to go through the 10s, goes through the 20, is curving down. Price action's already going to move faster than trend always. Trend is the move as fast as price action. Trend gets into formation, price action can randomly move up and down. Two different components. Do not gauge them the same. Do not gauge them the same. That's why I tell you guys you can run laps around traders because traders will see strong upward and downward price action and immediately think that your play can sustain itself. It sustains itself based on the trend that reinforces it, right? So your play will bounce, give you a strong move up. People think this is the recovery. That trend right there is a seller's neutral. Look at that shape. Look at that V shape coming down at you. That's a seller's neutral. Sellers are in control. You are literally giving them fuel to have a further downward continuation of that move. It's a real dynamic. It's a real thing. Share with you what it looks like. That 5 SMA, it could be different ones. Sometimes you can even have a 5 SMA coming flat at you and still see that you got a 10 simple moving average still coming at you. That's still a seller's neutral. The bottom part of that can be neutral, but the top proportion of that is still saying that you have selling pressure that you have to deal with before further upward continuation. Okay, it's a real dynamic. It's the layers of what a trend is that makes it difficult a little bit for traders until they get the swing out of it. Because trading is going to teach you the following narrative. You're gonna be excited to think that your play is just moving based on trend, but your play is moving in accordance with higher time frames trends being interacted with that causes demand and supply. But your plays also can have critical areas also in that are separated from the trend. Because generally when I look at demand and supply, is from the run-in of higher time frame trending structure. But you do have scenarios where I can see that there's just a supply area independent independent of my damn SMA showing the trend. And that's why the Bollinger Bands are important too. They'll show me that there's this narrow Bollinger Band, which I'll show you what that even looks like, even here on the daily, right? Look at this narrow Bollinger Band. Look how my SMAs are all compacted here. You see how my SMAs are compacted here? But I got this narrow Bollinger Band telling me that by historical data, there's an area of volatility above me. Y'all see that? That's a supply area. Narrow Bollinger Band underneath me. Got you. I understand why we bounce like that. You can neutralize it, but you neutralize it by bringing multi-time frame trends at it. especially the higher time frames to show you that. You got to bring the multi-time frame trend to neutralize it. That's the only way you neutralize it. You trend. You don't bring price action to it. You got to trend. You got to bring multi-time frame trends to neutralize a demand or neutralize a supply. So it's a very helpful tool for you, this Bollinger Band, because what it does, it tells you if you're inside of this, inside of the bands, you're in a range. You are not officially trending until you can start riding the Bollinger Band. See how you're riding the band? You're trending. This helps you so much because price action will have you ready to say that this play is trending. That play is not trending for me until two things. The SMAs get into trending formation and the Bollinger Band ride, okay? But we fell from here to here. You're not trending, boy. How you trending and you still got a demand area that can disrupt how you're moving. You have to conquer your demand area. You have to conquer your supply area. Or else you're still going to be in a range. Every time frame has a different trend, but they work together to form the overall trend. Okay? That's what gives you context. All right. So yeah, Snap, even with its earnings, is in the formation to sustain upward price action, not down, right? And they smoked that. The play had started initially looks like down. I'm not sure if that happened in earnings. I don't think it happened in earnings like that. I think in earnings it just kind of skyrocketed, still back to the upside. That play had a strong move down around 5 o'clock this morning. Now 5 o'clock had a stronger downward move. They got smoked. This play is already in a formation, income into earnings. It doesn't sustain downward price action. You would have been bouncing like hell at that same demand area if you had bad intel. They wouldn't allow this to happen like this, that your 5 SMA was already going up into the earnings. They would have had another scenario where this is already a neutral state so that you can break down further to the downside. That's how tricky and nasty the trade in the stock market essentially is, right? That's good, Mike. All right, that's how the trade in the market essentially is. All right, let me see something here real quick. All right, so I gave you the Bollinger Bands to put to your chart, leave them how they come, 2 standard deviations, gave you the moving averages, told you what time frames to essentially have up. You need context. The moment, I'm gonna say it one more time, the moment that you look at a chart and you say, I see this on that chart, I anticipate for the market to do this. You don't validate what that time frame is showing you, you played yourself. Watch this. We're gonna pull up some more plays, right? We'll pull up some more plays. Stop playing. Let's pull up a random play. Y'all know my random play. I always do like a Disney random. Don't get much more random than Disney for me, right? Disney, right? I'm a multi-time frame trader, but I understand this correlation. I do nothing more than trap big groups of buyers and sellers in correlation to higher time frames being in a trend that can break down big moves to the upside or big moves to the downside. This is what some people say, that I'm a counter trader. Everybody's a counter trader. It ain't just me. Everybody. You not getting that big move up. Look at this. You this big move up? Yeah, you got something to do with this big move down. Know what you're talking about? You a damn counter trader too. You understand where your players get their power, but look at this. Narrow Bollinger Band on the 4-hour chart. That's 2 trades. That's 2 trades. I come into the morning, watch this, and that's why I said I got to do a multi-video series because it's not fair for people to think that they can understand how to do everything that I'm doing in one session. I'll have traders that lock in with me for a little bit, and they'll skip town because they'll say, well, I got something else to add to the gumbo pot. What I give you is not going to work with your other conditional based strategies. This is absolute. This setup here, I just pulled up Disney. You guys saw I just put up Disney. I know what this looks like. I know what this looks like on my 1-minute chart. My 1-minute chart is going to have a scenario where my 5 SMAs leading, my 10 SMAs in second, my 20 sample moving average in third place with the Bollinger Band ride. I know what that play looks like. Look at this before I even pull it up. That's how booby trapped my setup is. I know what you look like before I even, because it's a formula. This is not conditional. I know what this one looks like. Get there. You got to get there. If you learn what I teach you, it's a wrap. It's a wrap. You hear me? What you want on it? Bacon, egg, turkey, chicken. What you want? Steak? which wrap you want? It's on there. I know what this looks like. Right? That's why we try to tell people like, yo, just please learn market structure. Please. You're not gonna come into the market. If you come into a market guessing what your play is going to do, we got to go back to the drawing board. That's all. We just got to go back. We got to go back to the drawing board. You're missing some key ingredients. Your plays have to get into formations to do what they do. And for the love of God, watch this. If your plays are in the formation that you know isn't quite right, and especially if you see structures that your plays are getting ready to hit, if your play sustains a move through those structures, it had to, and the SMAs are not right. They're not coming with you through key levels. Your play is screaming one thing and one thing only. It had to already overextend against a higher time frame structure to get that type of continuation move. There's a lot of different lessons. I'll throw this one gem at you guys that some of you already know. Man, if I get my candlesticks going through a key level of structure, key levels of structure would be like your pre-market high, pre-market low, previous day's high, low, or close, right? You got those scenarios. You got a scenario, answer your text state. You got those scenarios where you have to know that your 15-minute chart, this is a big thing for me. I have to know that my 15-minute chart's 5 SMA is going to be able to come with those candlesticks through key levels of structure. I have to. If there's going to be a scenario that my SMAs are going to play catch up, it's always the same criteria. We better have already severely overextended, even though the direct catalyst against a 4 hour chart, daily, weekly, that this can play catch up because we're getting so empowered from the overextension first that my 15 can come after the candlesticks have already crossed a particular level of structure to come back. If you don't have that criteria, you know they're lying to you and it's going to get smoked. You have to pause and not believe the dish that comes first served is for your nutritional benefit. You have to validate. You have to inspect. These people do not have your best interest at heart, they have theirs. So the dish that comes giving a slight look that it can do this or it can do that, you need to pause, see the dish, validate the dish. How do I validate the dish? Oh, I got this time frame showing me this. I'm going to validate, watch this, that higher time frames are not conflicting in a way that can disrupt it. I know that, watch this, 15-minute chart structure can be taken out by higher time frames. Damn. So what the 15-minute chart showing you can be valid? Unless it's messing with a higher time frame that can trump its structure. This is the real component. They hired a person at the job. You say, oh, my coworker? Absolutely. Your coworker coming for your spot. You don't know this. You thinking y'all on the same team. No, she coming to take your spot. Wait a minute. Wait a minute. You can't be so lollygagged that you don't understand that they could be showing you one thing and actually trying to do something behind your back to make you on the wrong side of that trade. the market thrives. The market thrives from manipulation. Traders don't know their left from the right. They don't know. Traders think that a trade, watch this, to the point that traders think a good trade is having proper risk management. They ain't got nothing to do with the fact that you're still on the wrong side of the trade. Well, the only thing you can control in the market is how much you're willing to risk. All these things, all these little sayings sound nice and they sound cute and they sound favorable, right? Well, make sure you have proper risk management. That ain't got nothing to do with you being with your proper analyzation of the trade, though. Congratulations, you lost an amount that makes you be able to play another day, but got you the element, the key thing is that, damn it, your personal risk tolerance has nothing to do with your ability to gauge the market direction. That's your own personal criteria. The same way that you got traders out here that say, man, we take 5% out of the market and we get up out these people's way. Okay, let's make sure we all understand that's the way that you trade because you feel comfortable with having 5%. Don't then teach people that having 5% of what you make on a trade is the way to go. That's your thing, right? That's your thing. Watch this. Institutions ain't coming in like that. And if we're going to talk about 5%, we must be talking about 5% of millions upon millions, right? We aren't that 5% must hit a little different. You understand what I'm saying? Yeah. But don't come in here and, because you don't want to make the market about your own personal assessments for its movement. It's not moving based upon your own personal assessment of what you think is acceptable. It's moving based upon its participants. So right after the gate, you got a lot of people that's gonna rub. A lot of people don't work like that. You mean consideration for others? And the market's gonna penalize you. It's gonna penalize you for that too. All right, you're gonna get penalized. All right, yeah. So because I know it happens, right? I know it happens, right? And like I said, I could be guilty of it too. That's why I introduce certain concepts to traders. That some of you guys get it on the back end about being able to see where your structural anchor is coming from a play, because you need to qualify that. If I'm telling you that your play is doing nothing more than having a strong move up or down into a higher time frame structure for its move, you didn't need to be able to say, hey, is that play, whose structure is it touching? Because if it's touching the weekly chart, well, damn, the weekly chart structure can change the structure from all smaller time frames than the weekly. So you have context. So if you saw, oh man, we got that daily chart trend coming. Nope, but the play is being empowered because it pulled into and overextended the weekly chart structure. That now on that reversal, we take that daily chart structure out. Daily chart structure, woo, start curving on the back end. If you're not validating, don't worry about it. They're gonna park the car from you. You're gonna be like somewhere in the valet parking, at their house. That's their car now. But my woman was in that car. That's their woman now. Market is dirty. All right? Listen to me. The market is dirty and grimy. If you don't understand the structure. All right. So you better lock in. All right. All right. So let me see something real quick here too. I told you guys I want to see something about Disney with how it moved today, because I'm about to wrap this session on up and we'll do some more sections. The next sessions that we'll do pretty much go into trend a lot more. And actually we did this one already. I told you that this play open. It already had, look at this. Look at what they're showing you coming to the open. This is a 4-hour chart for Disney, right? On Disney, I see you got a strong move down. I see that my 5 SMA is going flat. So coming into Monday at 9 o'clock, I already got a V-shaped recovery. Watch this. Here's the whole trade idea. I got all these shorts that still are in this trade. Look at this. I got all of these shorts that are still in this trade. Y'all see that? And they lost the trend on every time frame Listen to me. They lost the trend on every time frame from the 1 minute chart to the 4 hour chart to sustain downward price action. Which way you think we're going? Boom. There you go. You didn't answer your own question about how why Disney gave what it gave. This is a buyer's neutral because the 20 moving average was still slightly coming down, but this formation, look how I got a V-shaped recovery. My 10 SMA is also coming, but I'm not yet in an uptrend just yet on this 4 hour chart, but buyers are in control. And there simply just is no downtrend on any time frame. I went right to the 4 hour chart, but by the time the 4 hour chart is showing you this, all smaller time frames are already trending. They don't trend at the same time. So you got all the other time frames already trending. There's no reinforcement for that strong move down. You think it's going to sit there and go sideways. It's not going to sit there and go sideways. You be like, but it did. It sat there and went sideways for a little bit. How would you know it's not going to continue? Bruh, it's not even going just sideways. It's going sideways because it's trying to break down the trend because it's already neutralized it. They're trying to reverse it right now, but they're still running into underlying structures that they're breaking down. Don't let consolidation fool you about what essentially is happening. This play has already hit demand already and coming down to this area. It's already hit demand and coming down to this area. It can't break out because it needs to break down the underlying structure that's still reinforcing downward price action. So you see it thinking it's consolidating. You know the damn just consolidating, not doing anything. It's breaking down the underlying structure that was holding it down. And when it do, voila. Okay. So that's what Disney did. All right. Let's do like three more quick plays. But that's all in correlation for me. A lot of times I come into these opens, man, I'm just looking at the 4 hour chart daily. I want a strong move up or down. And I know it comes from essentially breaking down the structures or bouncing from the structures of the 4 hour chart daily and weekly. Right? Even the move that essentially it gives on Friday here for Disney, come on. It's a pop up into the structure. Look at it. 4 hour chart is in a downtrend. Whoosh. That trend on those time frames is so powerful, it creates supply. This play already has resting liquidity. Come on. Already has a big group of buyers already ready to squeeze the hell out of for further downward continuation of the move. Right? That's Thursday. Even Wednesday, listen to this. You can see everything. That's still a buyer's neutral formation. 10 SMA is coming up, even though my 5 SMA is flat. That 5 SMA being flat here on the 4 hour chart allows me to have smaller time frames get into a downtrend. But the 10 SMA is still coming up at an angle, it's still a buyer's neutral. Right? So we pop back up, but we can't break back out because smaller time frames were still reinforcing the downward move. It forms a bear flag for consolidation, but then we get the stronger move that starts coming back down. So still a little more of a choppier day because of the trend still here. But the next day you saw what it did. And even on, what was this, on that Wednesday, you had, so that Wednesday was actually this move here. You probably had the daily chart coming down there. I don't even want to pull it up here. I'm pretty sure you did. Daily chart probably wasn't trending. Let me see something real quick. Where I drew that line. Was that Wednesday? I think I'm already on it. Hold on. I'll pull it up just so you guys can see it since I'm actually pulling up everything for the week. That Wednesday, what day would that be? It would be this day with the line going through. Boom. All right, so that's the Wednesday. Wednesday, we open up in supply. The trend on the daily chart is a buyer's neutral, but it's not an uptrend. It's overextended, and there's a supply area here. It's just amazing like how simple you can see it. So that's why I tell traders like, let's just come, to probably do more videos essentially about trend. That'll probably be the most helpful insight that I can give you guys about trading. The moving averages represent more than just, oh, you just saw it hit those lines, so you thought it was going to. No, the formation of those lines tell me what the trend of that play is. Your plays get power for demand and supply from either the Bollinger Bands or from the trend. How would you trade INTC today, Reggie? Intel. there's going to be a strong move up or down that either pulls into higher time frame trend, or you're neutralizing and breaking it down so you can get a further downward or upward continuation from it. Watch this. If you had when I say that second part, if I was trending, and I lose the uptrend, if I was trending down, 5 SMA curves, and I lose the downtrend, especially on bigger time frames, smaller time frames get into trending formations from that scenario. They do. They get into trending formations first, and they'll go into squeezing big groups of traders for the further continuation, of a move. Okay? So with Intel, nothing different. Look at Intel here, right? All right, you give me, let's see, daily chart. Not getting a whole lot of intel about that, but it looks like it was giving me a type of V-shaped recovery here, but not a ton of intel. The cleanest intel that I would care for. Give me a little more intel about this, how this, even with this V-shaped recovery, that this still 10 SMA is still coming down, that this 20 simple is still coming down. So I'm still trying to break and unravel the downtrend here on Intel, but Intel was already telling me that even beforehand, no matter what, I got a neutral daily chart. My daily chart is neutral. Watch this. But between the 4-hour chart and the daily, I put together the situation. This play, watch this, they lied to you. Look how they lied to you. What's this formation where the 20 SMA is underneath the 5 and underneath the 10? Neutral. The trend on the 4-hour chart tells me the entire story. Bruh, if you want to get into a downtrend, this is what a downtrend looks like. Damn. 5 SMA leads, 10 simple knot, 20. This is not subjective. This is what a downtrend on this 4-hour chart would look like. What are you giving me? The 20 SMA is leading and is coming up. Hold up. For downward price action? No, sir. Downward price action, 20 SMA, third place. Third place. Ding, ding, ding. First place coming up. 4-hour chart is not in a downtrend. Let me give you guys this gem. And you better back test the hell out of this scenario. There's only one scenario that will make this play do something different. This play had to have an overextended move against a very higher time frames trend to have the further downward continuation to get through this structure and keep going. Is a number one scenario. If you validate, because watch this, I would see this, watch this. I would see that, hey, this 4-hour chart's 20 SMA is going to absolutely yoke this price action back up because we're not in a formation to sustain this against the 4-hour. How would I know? This may come off a little bit harder for some to understand. That's why I'm glad you can look at these videos as much as you need to. How would I validate that the price action that goes through this 20 SMA? See, the SMAs are not right. But Reggie, that's a 4-hour chart. So maybe there's a scenario where this is actually still getting itself into formation. And it's going to do it just on the back end because that doesn't move again until every 4 hours. So I could be missing out on a play by not jumping into that. Got you. There's a scenario that would make that play true. That play would have to have, against this 4-hour chart, you'd have to already have an overextended, very severe overextension against an even higher time frame trend, like the daily or the weekly or higher, to allow this to still be valid, that these SMAs will still be coming down through an incorrect structure. Why? Because you got to get into formation to sustain downward price action or upward price action. Is not subjective. So you have to be so in tuned about the fact of what conditions can make what I see before my eyes. You see how I be on, y'all? If you ain't validating what you're saying, you playing. Just saying, hey, just notice, okay? If you're just saying, hey, I just see this on the daily, I see this on the 4-hour chart, I'm gonna roll with it. Know that you're gambling. I just want you to know that you're gambling. I don't care what those smaller time frames tell you that they already are showing. If you are not validating this before the open, what you see, even on a 4 hour data, you don't want to then go to validate it, because what that higher time frame could be showing you still can have an even higher time frame that trumps the SMAs that's showing you, the Bollinger Bands that's showing you that you're gonna run into something. It can trump that to have further continuations of the move. You'll see your damn higher time frames V-shaping on the back end, Bollinger Band lines being written because you didn't validate. You better validate. It doesn't make any sense not to, because if you're going to use it as your gauge, you're going to use it as your opening gauge to see how your play can give you the strong move up or down, and then you don't want to validate to see if what it's showing you is actually true. You're gambling. As long as you know you're gambling for the day, cool, right? But don't come into a scenario where you feel like you did your homework and you didn't do it. Don't do that. All right. So with this, how would you validate? How would you validate, Reggie, that you said that's a wrong formation, that this 5 SMA should be actually, watch this, below that 20. And the 10 SMA should be in second place. So with me already having an overextended move in the incorrect formation on the 4 hour chart, you said there's one scenario. The my play would have to have overextended against the daily chart structure. So coming into this open, right? I don't have that criteria where we've already had an overextension, and that's what did help us to have a further continuation back down. But this 4 hour chart is not even in alignment, because this 5 SMA is already neutral, and has a slight curve to it. Even the daily chart says you ain't got no beef with me to give an overextended move back further down. You're actually going against even my buyer's neutral. It's a buyer's neutral on the daily. That 4 hour chart, congratulations, you have now confirmed that it is legit. Its structure is validated to reinforce upper price action. Watch this. But Reggie, we broke down through it. I thought you said that it couldn't. That is not what I said. I said it cannot sustain it. Well, how do you know that that play is not going to sustain it? I'm going to see whatever structures that you brought down, they're going to give me V-shaped recoveries with their 5 SMA. What does that look like? I like to generally see if my 15-minute chart trend would have come down with this play at the open, because if it did, everybody see this? V-shape recovery. It's a reason why your candle goes on steroids right here. And the way that play looks, Intel's a pretty good volume related play, but the way that play looks, because that 15-minute chart trend was coming down on this one, the 30 was, and even the 4 hour chart, this play gives me a mandatory, and I mean it, a mandatory look. I've been trading for so long, I know when my plays give me mandatory looks. I know it's bad, right? That play gives me a mandatory look where essentially that play gets into a 1 minute charts Bollinger Band ride. I know it even before I see it. It has too much trend coming at it. My 1 minute chart is going to get into trending formation. Come on. It looks like I pinpointed it, right? Right there. Look, you already had the arrow drawn there. I know. My 1 minute chart will get into trending formation there. You gotta get used to that. You gotta see it. Once you see it like I've seen it hundreds and hundreds of times, you be understanding how plays get into formations. Boom. That's around 88.26. Clean as hell. That's a 10.21. I know what that play looks like when it's ready for me to take that trade. So what we'll be talking about in some of the future lessons is basically understanding where your resistances are on the chart. When taking the plays at the appropriate time is only you're going to be able to survive futures accounts. We're going to talk about difference between futures and options. Also, we'll talk about the relationship the trend has with itself. I'm going to designate those lessons solely by themselves. Trends trend is probably one of the ones that I kind of will just be like, SMA look like this, SMAs look like this, SMAs, but you got to really understand the relationship the trend has with itself. it sounds so basic. You will understand. Like I got a lot of traders that been on my lives and they be like, oh, 5 SMA lead, 10 SMA second, trend that's 27 average third place. Got it. That's an uptrend, Reggie. I saw we're in an uptrend. But then we'll have context to be understanding the relationship that it needs to have with the overall structure. Cool. You see this on the 15-minute chart. What's the 30 doing? I'm instantaneous. That's where my mind gravitates. You doing this on a 15? What's the 30 doing? Because I know the 30-minute chart is next up. Can it follow? Because if the 30-minute chart trend can't follow, we got limitations to what we're doing on the 15. If the 1-minute chart gets into an uptrend and the 5-minute chart can't get into the same formation, we got limitations. And what price action does is a word that I call compound. It compounds the problem. Where the 1-minute chart can get into a downtrend, kudos. The 5-minute chart cannot. Look at this, 5-minute chart cannot get into that same trend, but price action is already having a severe move down, even attacking the 15-minute chart's uptrend. We can't even correct the 5, but the price action is so aggressive already correcting the 15 that I know we're going to absolutely reverse because the underlying factors of that trend show me that we can't bring the other links of the chain. So it's going to correct. That's a major lesson that I see on a routine basis. We saw that today with Google, right? We were getting some messages that, man, Google about to have some puts. I said, excuse me, sir. Sir, excuse me. We see that the 1-minute chart is getting into downtrend. Watch this, it's the same lesson, but the 5-minute chart cannot. How'd you know? SMAs can't get into downtrend formation, and we can't get into a Bollinger Band ride. That means the play can't take out its demand area. And the 15-minute chart is currently in an uptrend. And price action is attacking all of them right now. I'm going to get a V-shaped recovery on that 1-minute chart, and I'm going to come back up. This is a formation because the 15-minute chart structure is being touched, where we're going to take back that entire move and new high of the day for Google, and did, right? And we did. Appreciate it. And we did. We took back that whole move back and got a new high of day. The writings are on the wall. Compounding is a topic that makes me extremely dangerous because compounding is what tells me that a play can have, they have to have trend exhaustions to recover or stop the trend. Like they can't just stop. Compounding tells me that the play is taking on too much of a move than it can chew. So it lets me know how plays will still have to reverse pump the brakes. Do not pass go to jail, right? These are key concepts that you need to see beforehand. So even when the play is already doing something, you know that it will die. Why is this important for you? Because of the fact that the market loves to manipulate. So you need to already see that this is a manipulation move if you decide that you want to trade it. You need to already see it so you have conviction in the trade for the further continuation of the move. You need context, right? If I tell you that a play is a runaway train, I don't need to be looking at this play from a subjective mindset that says, hey, I'm looking to see if this play can just touch this key level. That key level, watch this, will not have the institutional backing to sustain and stop that damn train. Even if we start to denote or show that we have an interaction that is giving a reversal like move, the reversal is going to get brought back up because this is not the criteria that can stop this formation. It's I don't know, man. I just like I understand. Like I said, I've been doing I think I was doing like TikTok for like maybe going on like 2 years. I said, whoop, I said I gotta try YouTube a little bit. I got cast the net in a different location. We got to see something because I said, man, we gotta get people back testing this stuff because I really do be feeling bad for a lot of traders that come into an open and they have subjective mind frames about what their play is going to do, and the play is already equipped to sustain upward or downward price action. It is not subjective. It is not subjective. Okay? No play. For any play. Like for instance, I can already tell that they're lying to you. I said this earlier too. They're lying to us a little bit about NQ. But NQ, NASDAQ, it can't break down the way it wants to at this moment, but it's going to be coming back down. I've been saying that for the longest. It's going to be coming back down. It's going to be coming back down into that 4-hour chart trend. It's going to have to neutralize and break. I'll be looking for, see if this 5 SMA holds essentially on tomorrow for NQ, because this play is currently, this is what traders will get a lot of times screwed over. You'll be coming to a morning and you'll be like, man, the 4-hour chart still has some structure that can hold us together, right? But this play will already be telling you a narrative. Literally, hey, bruh, just want to let you know, I'm oversending against the daily chart structure that's not into an uptrend formation. They were doing this essentially even on, was it last week, right? Traders were just like, yo, what was this rug pull? It's the same formulation. This ain't no damn uptrend. 10 SMA above the 5 on the daily. So when you see you got that rug pull back on down, you know what that is. Look at this, 20 SMA above my 5 SMA. Watch this, cool beans. Daily charts not trending. Bollinger Band ride shows me when I can get into a true uptrend formation, all the way up there. So I'm not trending on the daily. Got you. The emphasis is for time frames to stay in the Bollinger Band ride. Stay in the Bollinger Band ride to continue trending. Getting out of that Bollinger Band ride is a red flag. I need this to be happening from a 1-minute chart to a 1-hour chart, because we're already at step 7, taking on daily chart structure. I can tell by the SMAs being interacted with. This is a play that's going to have more downward continuation. The thing is, we're going to have a lot more downward continuation back into that 4-hour chart structure, but you'll have to peep. If I get this V-shaped recovery on this 4-hour chart, whew, boy, this 4-hour chart 5 SMA starts to go flat. What it does, it intensifies the smaller time frames to have stronger trends. That narrative requires an entire series of teaching. That narrative, how I go neutral on the 4-hour chart, I go neutral on the daily, I be understanding that it's a lot of intel, but you have to understand the relationship the trend has with itself. That might be a damn 7-part series that I have to give just on that narrative. Oh, the daily chart goes neutral. Shit, we trending Bollinger Band rides, 1, 5, 15, 30, 1-hour chart. SMAs, 5, 10, 20 formations. Just from the daily going neutral, you got like 5 different things going on 5 different charts. Yes. Yes. We get into a downtrend to take on the daily chart's uptrend. Daily chart and uptrend? Yeah. Every time frame, 1, 5, 15, 30, downtrend SMAs, good to go. 1-hour chart struggling. Going against the daily chart's uptrend. Oh, we about to take the whole damn move back. What? Yeah, the context. The context is crazy. You hear me? The context is crazy. Too far away from the moving averages on the higher time frames, but you better be in a multi-time frame Bollinger Band rider. That play will get exhausted and return back because it gets its power on a routine basis from higher time frames. Context is crazy. You hear me? Crazy. Right? So we'll give you we'll give you as much as you can handle essentially on these lines. Plus, you need the videos. And I understand that people need to go to the videos, go through the library, zone in, and it's a lot of intel where I know I need to give you entire videos. You can be in the car, you can see things, you got spare time. The content that I share with you ain't even the content that you can essentially get just from just hearing. It's a mix. It's a mix. I don't care if you are an audio learner. You're gonna hear some things that make logical sense, but you also gonna have to see how the visuals line up to give you the confirmation to what you already know. All right, so it goes like that. Okay. All right. So that's essentially, like I said, we wrap up essentially on tonight. But yeah, this is a move, like I said, it's already starting to bleed out with the way for the NASDAQ. It's kind of showing me some things like this 30 minute. Getting off of the Bollinger Band ride is a serious offense when we are overextended against that daily chart ride. Like if this was not futures related, this is a play that I feel absolutely comfortable with riding on down into the 4 hour chart structure. I feel comfortable. And this actually would have a little bit more struggle, I think, more so at this 30-minute charts demand. Probably by the time you even get a little bit closer towards, you probably be towards that 4 hour charts, 5 SMA, right, where it will struggle. But this is a play that's going to continue to break down structure because it has the institutional backing it, even the areas of structures that it hits, right? Because it has a fuel source for downward price action back into more severe structures. It's going to come back into this. Now, this moves every 4 hours, so this may have a possibility of coming up a little bit more. The further breakdown, this 5 SMA has to either V shape or go flat, right? So on tomorrow, this is something I'll be looking forward towards. What this 4 hour chart, we'll see if this starts to go flat. But listen, it's going to still be a tricky day to have a stronger downward move because even that daily chart's 5 SMA is still currently hooking, right? So we still got structure. So I have to see essentially where we are in pre-market because that will set the tone for how severe of a downward move that we still can have because that daily chart got that 5 SMA down there too. So that structure that needs to be breaking down. This play would absolutely have to go to work in Asia session because if we come in, you can already factor in they're going to yoke it back up, right? You still can see they'll yoke it back up between the 4 hour and the daily chart structure. I can already see it. So this is a play that has to go crazy so we can already have more of a type of V shape, but you still got your work cut out because you even got that distance on the 4 hour chart where the 5 and the 10 simple moving average, even in breaking down V shape, and I still got this nasty 20 simple moving average is coming up at an angle. So I already know that that compounds me with trying to break down both 4 hour chart structure with no Bollinger Band ride, no proper SMA formation against that daily chart, that compounding structure. When I get nasty with it, it's because I'm always looking at higher time frames. Higher time frames don't get in and out of downtrends like smaller ones. So when I start making assessments about what I see for tomorrow, you know, that boy looking at them higher time frames because they don't get into those type of formations that easily break down like that. That's the only way I can make those type of assessments. If I'm doing that from a 5, 15, I can go uptrend and downtrend in the same day from those time frames, not from the higher ones, right? So in Q, I can already do this. This is why we tell traders, will you please factor in what happens if your play even gives you an extensive downward move before the open? Will you please do that? Factor it in already. What happens if you get that? I'm gonna give me a good bounce. Why? Because I got the 4 hour charts and daily charts trend already down there. I can miss the entire downward move and I'll still be given a good move because that's too much trend on those higher time frames to allow that downward price action to sustain. I'll have too many shorts that can't sustain a move, which should give me a very good bounce. Factored in already? Mm-hmm. Factored in already. There's nothing that this play can show me that makes me say that I'm not gonna get that bounce. With this 20 simple moving average, you're gonna have to get to serious work. Cause even if you do, the daily charge trend ain't gonna move like that. And I know I got that daily 5 SMA still down there. Boom. I'm gonna get me a bounce regardless. You know what I mean? But if I got more of an extensive move that can break down, that means that this had to form a V shape. Well, that has to be a scenario where I have a type of relay trend. I got an overextension and they trying to be slick about it. They trying to be slick about it because that's what the market does. But essentially you've had 1, 2, 3, I would give it almost 3 days of upward price action against the daily charge trend. It's not in an uptrend. And you come into tomorrow and you start seeing that the play happens to break down into a type of downward relay trend and you surprised. All right. Why? Why? Right? You not in no damn uptrend. So you got all the pressure from the smaller time frames covering for the daily chart's inability to sustain upper price action. So if they lose it, look at all the buyers that are still in this play, even from these lows. You got context. You got context. Let me come into mornings and start seeing that my 1 minute chart ready to get into a Bollinger Band ride, especially if this 4 hour chart's 5 SMA. This 4 hour chart's 5 SMA, right? Has a 1 minute chart Bollinger Band ride going through it. Don't say nothing to me. I'm shorting the hell out of you. Okay? I already know that's what a relay trend looks like. What is that? That's the one that screws traders over because they want to seek influences to see what the market does. Sorry, the market's always in a state of confluence, even if it's getting trends set up bit by bit. It still always has confluences with itself. So if we get a scenario where I see that that 1 minute chart says I'm giving you a Bollinger Band ride through that 4 hour chart's 5 SMA, sign me the hell up. Because those are the plays that always go crazy because they already have access to rested liquidity. Having access to rested liquidity allows your option contracts to go crazy. They go crazy. You know, right? They do. But that girl, when she said, Vado loco, they go loco. Right? I swear. She must have been seeing this particular setup. Because those are the ones that go out and get it. Your plays normally have to go up one way to actually come down. They generally have to go down one way to actually come back up, right? Because they generally don't have the power to instantaneously sustain upward or downward price action. You've been trading for a while, you see this happen all the time. But you got these scenarios. You got these scenarios where essentially your play just goes. Your play has already access to a big fuel source for upward or downward price action. It already has it. It already has it, right? And already having it means your option contracts go crazy because that already means that there's a big group of traders that are being compromised to give the further continuation of that move. You get the volatility of those options, your options contracts go crazy because the traders are thinking key levels is where it's at. Key levels are where resistance will be at, key levels will be a support at. If you are amateur 101, you think that the market is based upon what it does at key levels. The market is based upon how it interacts with higher time frame structure. That's where your power comes from. I need to say it again for the people in the back. Your market, anybody's market, Forex market. You think it's a game? Forex market. Let's pull it up. Let's pull up the Euro USD, right? Can we do that? Let's pull up the Euro USD Forex. So how do you trade Forex? It don't matter. You heard what I said? It don't matter. When I see the power that you gave me today, I'm going to see a damn interaction with higher time frame structure. Okay? I'm gonna see an interaction with higher time frame structure. All right, got you. Now let me see what Mr. Forex decided to do today. We're gonna trade it from the same criteria of a normal 9 o'clock scenario. Euro against the USD currency pair, right? Ding, ding, ding. Strong move up into the 5 SMA that's coming down at an angle. Watch this. Is neutralized. Reggie, you just looking at this play for the first time, you know it. Reggie, if we get into a formation that this 5 SMA gives a V shape, it starts coming down, and starts coming down, what's the scenario that we're going to have here? You already know? Yeah. What's that? This move right here? 1 minute chart Bollinger Band, right? Right here? Like clockwork. 5 SMA, 10 simple moving average, 20 simple moving average. Well, I be trying to tell y'all, you don't play with this stuff. My chart's a booby trap. What happened? I'll tell you what happened afterward. Catch up. Boom. Boom. Don't ask me no questions. I know what that play looks like. Stop playing with me. I know what that play looks like. I know when to take it. I know what it looks like. I know what it forms. I know the structure. I know the SMAs. I know the. Come on, stop playing with me. I know exactly. And this is the 5 minute chart. So that means the 1 minute chart had it happen earlier. It's a multi time frame Bollinger Band ride. There goes my 1 minute. I know it gives me that look. I know it gives me that look. All right, let me tell you what happened there. Same criteria. You were trending. All right. So you were trending. Watch this. Watch the criteria on it. You were trending. Were you not? Mm-hmm. Look at that. 4 hour chart bouncing you. Mm-hmm. 4 hour chart trend goes neutral. What I'll be telling you, by the time that damn 4 hour chart trend goes neutral, I know 5 SMA starts to curve and hook, right? Curve and hook. And you got another bounce that's coming on this one because it's compounding. Yeah, I'm already there. Got another bounce. So you got this 20 SMA here. You're like, okay, my trend is still coming down on the 5 and 10. You got your daily chart. We'll talk about that. But you lost the trend of the 4 hour chart. This allows smaller time frames to trend. You already got a Bollinger Band ride essentially on multiple time frames coming back down. 1, 5, 15. Probably had a 30 up in there. Hey, how you doing? Right? Where they're trending with Bollinger Band rides in proper formation. 5 SMA leads, 10 SMA second, 20 SMA in third place. Come on, these plays give entire formations to sustain movement. Look at the formations across the board. It ain't subjective. It lets you know that plays get into formations to do things. What's the criteria? The trend just went neutral on the 4 hour chart. Got you. Smaller time frames were already able to get into formations to now reinforce downward price action. Damn, the play has a bunch of buyers that will be used as continuation fuel for the further downward continuation of the move. Just like that. Just like that. Right? And watch the bounce. Watch me qualify the bounce. You coming into the daily chart that's in a damn uptrend. We got rules. Daily charts in an uptrend, how do you know? 5, 10, 20, right? Daily chart in an uptrend. Okay. With my other time frames, they better be playing substitute teacher. Why? Because the daily chart is in a damn uptrend. Hey, I'm gonna need y'all to get back into that Bollinger Band ride. Need to get back into that Bollinger Band ride because y'all better be trending. Daily chart is not trending. 30-minute chart, not in Bollinger Band ride, trend currently neutral. This ain't good. This ain't good. This play is already telling me, watch this, because it's compounding. Watch this. The 4 hour chart has a 20 SMA that's in this area. And the daily chart has a 5 SMA showing me that it has an uptrend in this area. Watch me qualify it. How would you qualify it? You better have an overextension against the weekly chart trend if you want to continue coming down. Boom. All right. All right. You had a strong pop up into watch overextension against the weekly. Look at that. Against the weekly and popping up. Okay. I got some context. Watch this. Or else, I would already be saying we gonna smoke this play back to the upside. See how I qualified that? See how I qualified that? Gotcha. So you have a right. Watch this. You have a right to now continue down. Watch this. But I'm gonna know if you're not. Why? Because your ass ain't gonna get back into these Bollinger Band rides. On that 1 minute chart, on that 5 minute chart. Watch this. You done made it easy for me. You better get your ass back into that 15-minute chart Bollinger Band ride. You making it too easy for me, dog. I know the look that tells me that you ain't about that life. You better get back into that Bollinger Band ride on that 30-minute chart. I already know what you got to look like, big dog. You're not faking me. But Reggie, what if we give a little bit stronger move back down? I don't care. You better get your SMAs right and your Bollinger Band rise 1, 5, 15, 30. Let's go. Watch this. And this is a play that's going against the daily charts 5 SMA coming up at an angle. The daily chart is probably one of the more unforgiving charts when you come with incorrect structure. The way it will pump the brakes on your smaller time frame trends and yoke that price action back the hell up needs to be studied. Okay? Needs to be studied. Do you see I already would not even care if I get further down with continuation and seeing that that weekly chart is overextended? I wouldn't even care This play is telling me both ways. Get yourself back into those Bollinger Band rides if you're going to get busy. Get back. Get yourself back. Look, I'm not even interested. I'm not even interested in this play until I get multi-time frame Bollinger Band rise either down or up. And it's severe. It's so easy. Where the range of the restriction of this play tells me I got to ride the Bollinger Bands on the 1, 5, 15, and 30. Up or down. All of them. I'm playing, if I don't get it, on all of them. Checkmate. And this is Forex. We don't be trading Forex. It don't matter. Charts is charts. Same criteria. Obviously, the relationship that big groups of traders can sustain upward or downward price action in regards to market structure. What if news? Yeah, news will work in correlation with market structure. Move outside of market structure, and you're going to have to correct market structure to continue. Just like a video game, got to insert some more coins, you want to keep playing. You're going to have to correct market structures if you want to continue going up or down. All right? It's just that simple. It ain't that hard. It's just you got to get used to it. And it goes against the grain from how most people are taught. But I know that this play's trying to be a little bit more on the trickier side, but it's valid though. That's the funny thing. It's valid to actually have a sustained move still actually coming further back down because of the overextension. You did this before on this play. Generally, when I know that it's coming, and the thing about forex pairs has some conditions that you'll never essentially see because of how frequently they move at different times. They move at a different pace than your normal chart. Right? So we'll see some setups where my SMAs look like it's doing stuff that's on a 1 minute chart. We don't get such formations essentially on our regular time frames like this. We don't the formations of how we get into trends will look similar to what we can do on a smaller time frame. Not on the weekly. We won't be doing as much as these plays be doing over here with Forex. But still, it's still the same. I just know that like, oh, that's a little bit of a different look. But I still can give the criteria on it. But you did this before where look at this move up that you had to the upside. This move that you had to the upside was not in an uptrend. And what this play generally does in this area right in here, it lets me know the same criteria that I use when I take my other trades. My 4-hour chart will be already giving me in this area a V-shaped recovery. My 5 SMA will be like boom, boom. At that time, just that little simple 5 SMA doing that lets me know that I lost the trend of the 1 minute, 5 minute, 15, 30, 1 hour, and the 4-hour chart in that area. Boom. See, I drew that V-shaped recovery. And was my box there? Let me see. Where's my box? Let me go back. Remember I drew a box? Boom. There goes my box. And in my box, look at my V-shaped recovery with that 5 SMA. V-shaped recovery. Because I already know it's supposed to form. And while I'm getting that, I'm in Bollinger Band rise on the 1, 5, 15, 30, and 1 hour chart, that area, right? I already know what time it is. So with this one here too, because it's overextended against the weekly time frame, come on, you give me a little bit of insight. There goes my V-shaped recovery, but I do have that 20 SMA as a form of support. But look at my 5 SMA is still essentially coming down, but I already got my V-shaped recovery. I told you that 4-hour chart is like such a godsend when it comes to any time frame structure that you want to see this actually breaking down. It's generally like above the daily chart or above the weekly, like going into those really higher time frames. The 4-hour chart already tell me like it's already overextended because this thing was overextended against that weekly, and there goes my V shape on the 4-hour chart right here. It's around this 5 to 9 o'clock candle here on Euro USD. So you already put the pieces essentially together, but here comes the concern that 20 SMA. You need to see if the trends can continue to break through that. So essentially, I would even draw like a little bit of a line there. Of course, I want to see that my smaller time frames are essentially trending through that structure. That's what I would want to see. I think that's around 1150, somewhere around. I think it's 1150 or 1150. So I want to see that my 1 minute chart continues to trend essentially through that area. It's not drawing my line. See, it's a little bit further down. Yeah, 1 minute chart. Come on, baby. I need to see my trends coming down through that particular area of structure. That's how I would know that it still has ill intent. So I would still play a little bit more of a waiting game to make sure that my trend doesn't die on this one. I'll probably take a look at it tomorrow just for the hell of it, just because it had you like in a little bit of limbo, just because to see if the trend continues. If the trend continues down, it has rest and liquidity that it can squeeze for the further continuation of that move. It does have a Keltner channel in this area here too, but I don't know why I said this one gives a little bit. It's not hard for me to analyze, but it makes me play a little bit of the waiting game. But the setup overall shows you has stream demand here, but you need to see if that stream demand can be essentially overridden, and it gives a look where you get a multi-Bollinger Band ride. I know I already have it checkmated, but it has to give that multi-Bollinger Band ride from the 1 minute chart to the 30. And this one is absolutely going to have some problems if that 1 hour chart can't come. Then 1 hour chart got to start rocking it too. I don't know why I gave you such a hard example, but you're like, oh, I got to wait a little bit. Yeah, you still have to wait a little bit on that one to see if the trend still comes down, because it's on the verge of reversing either way. It doesn't trick you because it got to get a Bollinger Band ride on the 1, 5, 15, and 30. Either way, up or down, so you still know what it is. All right, and let's just do this last one because I try to be slick with that. They gave the complete rationale to why it broke down the way it did today. And here goes another one, even though it's Forex. Let's take a look at it. I'm higher time frame guy, right? So on the 4 hour chart, look at the move. Look at this move here. 20 SMA, 4 hour chart was below the 5 SMA. Even when the 5 SMA gets down here, look at that formation. There ain't no damn downtrend. You like, show light, bitch. I said this barber used to talk to that. Bitch. All right, so you're not in the downtrend, so you put the emphasis on smaller time frames to continue trending. All hell breaks loose when you start seeing the 15-minute chart, 30-minute chart give V-shaped recoveries, which is a prototypical look that the 5 SMA will form on those smaller time frames that will try to cover suit. This play struggles like hell. Why? Because you're trying to sustain this big move down, right? Look at it. It needs downtrending reinforcement. You see the separation from when you're here to where the actual 4 hour chart trend is? Got you. Because smaller time frames are reinforcing the move in the 4 hour chart's absence. But this is what price action does. Price action says I'm all the way down here, right? I got distance from the 4 hour chart trend. Watch this. So the 4 hour chart trend is currently not reinforcing that move. Got you. But you're already messing with the daily chart's uptrend. You see how you skip? Daily chart trend is stronger than the 4 hour. 4 hour chart downtrend is coming, but it has distance to where price action currently is. But price action is already messing with the daily chart's uptrend. Damn. You know what it's going to look like. Watch this, 15-minute chart trend is going to be coming down. 1 minute chart is going to ride through the 15-minute chart trend with a 5 SMA that leads, 10 SMA in second, 20 SMA in third place. Bollinger Band ride to the upside. Going up. You serious, Reggie? Dead ass. Watch it. All right. So the 15-minute chart's downtrend. Look at it. Boom, 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 boom. Boom, boom, boom. This is the first one. Watch this. The second one. You'd be like, why did it do it twice? Let me show you why I did it twice. So even though you got the first recovery here, because people don't understand when W's and things like that form. Why? They form because there's still someone's structure. So even though you got a recovery here, when the 1 minute chart starts to get into trending formation, you still trying to break down the formation of the 15. The second one gives you the same thing, but you still got the 15-minute chart's supply area. You pull back again, right? Now the play It's telling you about the range of restriction. What do you mean? It's telling you when is the cleanest time to play because it has so much resistance in the way. It's telling you you sit back and you can wait to get that 1 minute charts, 5 minute charts, and 15-minute charts Bollinger Band ride. Even the foolishness like this that used to confuse me, man, why did you do that again? You was in the ride and give it again. That play is screaming to me that you're not looking at your range of resistance. This is a major lesson that you'll learn once you put your SMAs together. Watch this. 1 hour chart. Look at this. When we drew the X, look what's there. A freaking 20 simple moving average. Nothing that these plays do is random. Ain't nothing. I'm still trying to break down the structures that brought it down. It's not good enough for you to be like, yo, my play is at massive support, massive resistance. Did it destroy the trends that brought it down there? If not, they're going to have to be dealt with for the further continuation. It's a reason why your play is on steroids after you get through that 1 hour charge 20. Why? Because you got a bunch of shorts that can sustain downward price action and literally lost all the downtrends from the 1 minute chart to the 1 hour chart that were reinforcing that move. Why are you struggling now? Ain't nothing subjective. You got a 1 hour chart supply. You're not trending on the 4 hour chart. You're not trending, but why would this play be getting further extension and still essentially maybe coming up? You got a V-shaped recovery here. What is that a sign of? Easy for me. Your butt overextended the daily chart structure. Got you. But this one still got its work cut out. Why? Because you got to put this 4 hour chart back into a trend. Well, that sucks. My 5 SMA is all the way down here. And I can't get a Bollinger Band ride. So the play still already screams to watch out for trend exhaustion. This play would only have a rights to fame if there had been an extreme extension against the weekly chart. Weekly chart was downtrending when neutral. Weekly chart even has reinforcement at this 20. The play still overextended, right? So you just allow the trends to essentially break down. You got another move that would happen on that one there for AUD. Still, they'll look for once the trend stop for it to essentially be coming back on that one. So you see how the trend is still there? 15? Yeah, that's going to stop. That's going to flatline. That's literally going to V-shape. That V-shape gives you a 1 minute chart. Move down, the 5 minute charts in the vicinity. That play is telling you it needs to ride the Bollinger Band on the 1 and the 5. What you generally can see is that probably right underneath this 10 SMA here. Boom. My 1 minute chart still got some limitations because look, even though it's giving me this Bollinger Band ride, which I know and I love, right? The 5 minute chart is not in formation where essentially it can instantaneously follow suit. And instantaneously follow suit, I can see my 5 minute chart still has an entire area of demand. So I got a little bit more chop on this one. Even though it gives me a move, it gives me like a scalp move into the 5 minute charts demand. I can see this stuff because I see trend independently. I see structures independently. I understand it represents the entire structure of a play, right? You're doing too much. You're not going to be taking on 5 minute chart trend and at the same time taking on daily chart trend. You're doing too much. You still want to be getting popped back on up on this one. You still will get popped up and coming back down at the moment. A daily chart always has pretty strict criteria. It really does have strict criteria, but it does tell me that, like I said, it has even this like I don't know why you're getting this to happen so much in Forex right now, but you got scenarios where my weekly chart is involved to give me the go ahead to see if my plays can come back down against a weaker but powerful structure like the daily. Because this is a weekly overextension, right? And see how the play tells me on the daily. I got my 5 SMA here. Cool. I'll just see the following scenario where my trends don't stop. I'm gonna get 1 minute chart Bollinger Band rides going through that area. They'll let me know I'll see how even the bounce is screaming to me that it can't recover, can't get back into SMA formations, can't get back into Bollinger Band rise. That's what they always let you know when there's a move being empowered by a higher time frame. The recovery doesn't work. You'll be already being able to draw strong moves up. You see that the SMAs won't line up. You see that they're going to narrow Bollinger Bands. You see it be touching another higher time frame trend for the further continuation of that moves downward price movement. Okay, so you get a lot when you start to understand market structure. You really do. I'm introducing a few things just for the standpoint of the live, so when people go back, they can be like, yeah. I remember you saying that. Even if you just kind of first hit you initially, because the market is going to throw you so many looks. You're going to be like, oh man, I didn't catch that one, or I'm familiar with this. The market is going to force you not to be a one trick pony. You know, there was a time where being a one trick pony was all you needed. Not now. You would miss one of the best trading days of the week because it did some things that didn't fit your trading scenario. That's the market nowadays for you. Congratulations, right? Congratulations, right? You not gonna have them cute little setups that you used to have in the past. You're gonna come across scenarios that you don't know how to interpret, and your normal good day is not gonna be your good day. Right? All right, guys, I'm gonna holler at y'all. Like I said, I think I've been on here for about 3 hours, but there's gonna be a lot more trading education. Um, I will introduce like certain shorts, but you guys still need the back end information. You really do. You need the back end information of like an entire sit down moment. Boom, tons of hours of intel that you can kind of go back, brush through. Like concepts. Oh yeah, I remember seeing on that lab. You know what I mean? Where you go back, look at it. It's tons. But I'll do some shorts where you can just kind of at least be introduced to a particular topic. But those click better once you understand the kind of entirety of where we come from with basically analyzing, the plays that we do. So like I said, in the future, we got more videos coming up. Essentially, I'm gonna do them in live format. So they're gonna come in like live format presentation for you. So whoever's there can still actually see me doing it in the course of the live, right? Doing it in the course of the live. And I like with YouTube too, because I can record other stuff and it still will post it in the live section. I guess the database is a lot different, where this will be helpful for you guys and seeing how I even approach live trading. That's why I told you I was more excited about YouTube, because it freaking records it. So I ain't got to be up here acting like, oh, I'm seeing something after the fact. You'll see how in the videos in pre-market, this what we got, that what we got. See what I see right there? Market ain't even open yet, right? And you already see how I done broke it apart. I ain't doing nothing but reenacting what I've already seen in pre-market, because I know that coming into an open where I'm analyzing market structure is a death sentence. All right, look at this bounce that's happening on here too. I told you that was coming because that 5 minute chart still is telling me it couldn't get into trending formation. Can't get into that Bollinger Band ride even with this Forex play. 15-minute chart trend is still coming up. A little bit of a bounce there. 30 still coming up. 1 hour chart still got this Bollinger Band ride here. Like, how would you feel about this one? The lack of the Bollinger Band right here on the 4 hour chart and the 10 SMA being above my 5 still puts me all in. This puts me all in, what is it? Overextended territory. Because you put too much pressure on smaller time frames to sustain the move. Those plays be needing tons of liquidity pools. They be needing tons of pullbacks into a higher time frame structure to continue that move. So if they don't get it, when I know that my saving grace is the trend on the 1, 5, 15, 30, or 1 hour, is going to die. So you essentially look for this 5 SMA on the 15 to give a V-shaped recovery to start letting you know how you're going to break down stronger. You got to neutralize that 5 minute chart trend and got to trend on the 1 minute chart. It's that simple. All right. All right, guys, I am going to holla at y'all. All right, I'm going to holla at y'all. I think the only thing, if you're really advanced in what I teach you guys, Pay attention to this scenario and this scenario altogether because it happens too much. It's starting to happen too much. You hear me? It's happening too much in this market. It's where you hit demand. So your play hits a very strong demand area and it's going to bounce up, right? It hits a very strong supply area. It's going to come back down. The 1 minute charge trend in the way, not really concerned about that. That's going to recover very fast. 1 minute charge trend in the way, going to recover very fast. You got some distance. Here it is. You got some distance to come into that 5 minute chart. You got some distance to come into that 5 minute chart. Literally, some distance to come into it. That distance at a demand, and it has to be this. Watch this. Only your 1 and 5 minute chart are in the way. 1, 5, and 15, wait. You're generally going to want a 1 minute chart Bollinger Band ride going through the 15 minute chart structure. 3 time frames, severe. You got too many, watch it. You have too much structure that helped you get down to a demand. Too much structure that helped you come down to a supply. If that play would literally rip it, listen to me. If it literally would rip it, that play generally has this look. 4-hour chart, 5 SMA, 1 minute charts, Bollinger Band ride through it. You're not going through the 15, 30, 1 hour charts trend instantaneously without an overextension of the 4-hour chart or greater. And they give you a vehicle. It's a 1 minute charts Bollinger Band ride to start that relay. Don't even think that the relay process throws you off. It's a criteria of an overextension and an overextension of 4-hour chart and weekly or daily chart structure to get it. It doesn't just come up. But if you get this scenario where you're at demand and supply, you got 2 time frames. 1 minute chart, we don't really care. 5 minute, you understand this criteria. If I got distance coming to that 5 minute chart, especially with an overextension, it can get these hands too. Go ahead and get in. Who cares? If it is nearby, you're going to have to wait for a little bit of breakdown first, and then you take it. You're going to wait for the 5 minute chart to start flattening out, and you generally want to see that the 1 minute chart trend is getting close to trending through it to take it. It comes from the standpoint of the vicinity that 5 minute charts trend is in correlation to when you're hitting that demand or supply. If there's distance coming to it, do not wait. Get the hell in. If it's nearby, I'm gonna need you to wait because your play has to break down those SMAs that brought it to demand or supply. 15-minute chart, 3 time frames and higher, you know to wait. Do not get chopped. You only got one scenario and one scenario only that makes that work being aggressive. And it always gives the same look because your 1 minute chart needs to relay the trend into other time frames. It's going to be getting into that Bollinger Band ride quick, fast, and in a hurry so that other time frames can begin to follow suit to reinforce the move. So it has to be an extreme overextension. It's always a direct correlation. It's not a extreme overextension just to the pre-market high. Stop it. Or to a key level. It's an extreme overextension of a key level, 4-hour chart or higher to create that multi time frame. Bollinger Band ride to the downside. Watch this, where your time frames are not trending across the board. Do not let me hear you. Do not let me hear you say I was shocked that we got that Debo, that we got that multi-time frame downtrend. Why? Why? You know how it sets up. You know how it sets up. You've already overextended against one of the higher time frames. The 1 minute chart's Bollinger Band has a tendency under those conditions to go through the 4 hour chart structure. It loves to go through the 4 hour chart structure under those conditions. It does. It does. You got that 15, that 30, that 1 hour chart straight. You know it already says, damn, I gotta have a supply if I would come through that. That's a lot of trends coming at me. You only got one scenario that can save you. An overextension of a higher time frame structure. That means that your trends will be correcting so fast, they're going to give V-shaped recoveries to get into formation. Stop playing. You even know it has to. I got an uptrend. 5 SMA got to get through that 1020. Got you. Got to give a V-shape to give that, right? Got you. That ain't happening just because there's some rinky dinky level. It will absorb that move. It's going to happen because there's some higher time frame strength that is now creating supply or creating demand that you can knife through it, right? Got you. Come on. And if it's too many time frames, that play then starts to demand that you got to get your Bollinger Bands. Got to get your Bollinger Band. And that 1 minute chart always sets the time. But the 1 minute chart always, through the 4 hour charts, 5 SMA, don't ask no questions. Don't ask no questions. You got to relay 101. We got a school for relays. Relay 101. 4 hour charts, 5 SMA, 10 SMA, 20 SMA is going through. The 4 hour charts, 5 SMA on a very after a strong move up or strong move down. They go crazy. I know some traders won't know what I'm talking about. For the ones that do, watch that. That's why we did it in here. So I'll be like, damn, the stuff that I went over on the first video that I posted was crazy. Because some of that stuff that I'm saying right now gonna hit you on the back end. Yeah, you're gonna get it. You just gotta introduce for it. It's in your subconscious. Let that marinate. I'm gonna let that marinate for you. You gonna catch that and what? Look at that. You catch that next season. But it's gonna be inside of you marinating. All right. All right, guys. I'm gonna holler at y'all. Peace.